We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Wait, hold on. I had to enable desktop audio because I always have to remove that when we're doing the intros, just simply because it. Oh wait, this is actually where I wanted to. Dang it, I am not allowed to edit that after we start.
Hey, are you guys music lovers?
It is what it is. I personally,
do music.
Yeah.
Bro, I think I'm going to Iron Maiden.
Oh wow. Wait, where are they
Iron
playing?
Maiden tickets. Amarillo, Tampa.
Oh, yeah.
On the
that's right there.
27th. Me and my buddy were talking about going like a year from now. And then his girlfriend looked up when Iron Maiden's going to come around, and it's on the 27th. And I was just like, bro, we have to go see Maiden.
Yeah. I'm just messing
I'm
up.
so
Wait, sorry, I was
excited
trolling
if I
you.
get to see them, dude. I'm going to be like a little kid. I'm going to be a 44-year-old child listening to Iron Maiden.
I think Austin is a big fan of Iron Maiden. I gotta ask him.
Bro.
He's probably watching right now, so answer in the
Bro,
chat if you
ask
are.
him. Because I listened to Iron Maiden in high school, and I got out of the habit, and then I re-listened to them, and I was like, God, I forgot how phenomenally good this band is.
Wait, someone's asking. Oh, okay, yeah. Someone's asking why haven't you seen the Roo Rabble for so long? I think it's Sam Veers, sort of within that question.
Some of that is
Cole,
I think
stop that.
Chris
You're gonna
is
give.
extremely busy. And I also my days off are Wednesday and Thursday now. That's not convenient for anybody to do. You know what I mean?
Yeah.
I figured this is what I thought you guys were gonna do. I thought you guys were gonna keep doing the live stream, and then I would pop in when I could. That's what I thought was gonna happen. And when it ended, you guys weren't doing it as much. I was actually surprised by that. I was like, who cares? I'm not going to get mad at you guys for keeping it going. Just do it. It was fun.
No. It's Chris who hasn't been free.
Yeah. I've been streaming here and there, when I have time, just for fun. It's fun.
He's got 2 kids, man, and he makes videos now. It's
Yeah.
not, you know what I mean?
Yeah.
So
Kevin has 2 kids. He streams.
Kevin also has $20 million and that he stole from all his fans and no responsibility.
Shots fired. Well, we'll get into some other topics. I'm sure Cole wants to talk about Albertsons a little bit more.
Kevin's also down $20 million after earnings today.
Oh, that is true. No, he's not down $20 million, but he was at 40. Then he went to 20 because I think his portfolio blew up. But anyways, the first thing I want to cover or get out of the way, because I have an itinerary for us to talk about, and then we go into random chaos. Okay, but there is a moment for random chaos and Q&A. So the first thing.
And that's the moment you do the strobe lights again.
No, dude, don't
Bro, if
encourage
I
him to
get
do
a
the strobe lights.
seizure, I'm not going to be happy. No, I'm just kidding, dude.
All right, so it's cold. The strobe lights. Oh my gosh, you're gonna give someone like an attack or something.
I didn't know it did that.
You didn't know it does that? Well, I think it's like it's strobe and colorful.
Yeah.
I'll be right back.
All right, so the first thing that we're going to be talking about is Tesla earnings. What?
5 minutes in, we're already down a member.
Yeah, we're already down a member. He died. So Tesla stock is actually down after hours by 6.25%. So I'm going to actually pull it up.
I wanted to show you guys this before we get into it. My sweet, sweet new cowboy boots that I got in Austin.
Oh.
They're the fucking greatest thing ever, dude.
Are they comfortable?
Oh, I'm breaking them in and they're not uncomfortable.
Oh, wow.
That's the weirdest thing. I'm like, I got to break in these boots, so I'm going to suffer. Pinches the top of my foot.
All right, so when I share my screen, I don't even share my screen. What I have to do is just basically switch you guys out. So
Okay.
then I just do this, and then you'll see. It's like makeshift, but it's so much better than using StreamYard. My opinion. Oh well. All right, and then I just do this. It's easier this way. All right, so Tesla is actually down 6.25% after hours after reporting earnings today. Did anyone here get a chance to take a look at those earnings?
No, I read something really quick, and I was going to do a video on this and point this out. Tesla's earnings went up, right? Their cash flow went up, but their stock dropped. Why? Because I mean, I know why.
Yeah.
I know why. Because everybody's baking in the Fed's interest rate hike, and everything's catching up now. So here's my hypothesis. Somewhere in the next couple quarters, Tesla's going to miss earnings.
Yeah. Well, I think there was a slight miss on revenue. It did grow nicely, about like 50-something%, but I think there was a slight miss on revenue, slight miss on deliveries, and so there might be something in there. Although, funny enough, I think China was actually pretty good, but we'll talk about that because I didn't see many people talk as to some more recent developments in China going on with Tesla and the administration in China, but I feel like that needs to be discussed, to say the least.
The moment
I knew from the beginning the Chinese government was going to steal his technology. That's what they do.
Did you see Elon Musk's comments on Taiwan?
No, that's going to be a problem, man.
You did or didn't see it?
No, I didn't see him. What did he say?
He basically came out with essentially what you could consider a mouthpiece argument from the CCP regarding Taiwan, basically saying that they should, kind of make concessions, become like a Hong Kong, but not as bad as a Hong Kong. And so you had, and this is something again, like you can't divorce this from the business of Tesla as itself, because it made a deal with the devil by doing business in China. That's was my opinion the whole time. I received criticism. I think you might have received criticism for the same commentary, but they basically went about doing that, and they're in the position that they're in. Okay, now how do they move forward? Well, they came out, or Elon Musk came out with some opinions or statements about Taiwan. Chinese government, of course, supported that. The People's Daily, which is the propaganda piece of the Chinese government, was very favorable towards that. And all of a sudden, just coincidence, good numbers come out of China. Just coincidence. You also have approvals that happen, I think, in October 11th, I believe, tax exemption from China. So, just all coincidental happenings, just had nothing to do with his statements.
Bro, here's the problem. Here's the problem with Tesla that a lot of people aren't seeing. It's exactly what Chris said. It's a luxury auto company. Okay?
Yeah.
You can argue that it's not all day long. But the fact is 85 to 90% of its revenue and profits come from auto sales. Okay. So we're in a high inflationary environment right now. The Fed's trying to drain it out of the market. Everybody has less money. How many people do you think are going to start canceling their orders? This is what, and the thing is the Fed's interest rate hikes haven't even caught up to Tesla yet. The market's still processing all of that.
Yeah, it takes a while for everything to churn through. That's correct.
Well, here's what we know. When did the peak of the market happen? 2020, December of 2021 or November, that area. So the S&P, we'll just use that as an example, was going up and it got to like 4,800 and it stopped. Why? Because it was processing the likelihood that the Fed was going to have to start raising interest rates. So then they announced the hike in January. Tesla stock, the price starts to freeze. And then what did we see in about March? That's when it started ticking down.
Fabio, what's the 52-week high on Tesla?
52-week high on Tesla.
414.
Yeah, year range.
414?
414. I'm trying to
Yeah, I mean,
optimize like the
been
way
cut in
I'm
half.
going to visualize this. I think this is actually might be superior. Oh, didn't mean to do that. This actually might be superior way of doing it. Give me a second. Yeah, applications. Yeah, this is the better way of doing it. And I just click here. All right. Oh, much better. Okay, because that way we at least have, you can see us down at the bottom. Of course, we're really tiny until I stop sharing, and then we're back to normal size.
No worries, man.
Yeah, I like it this way because, one, we don't have limitations. Two, I can actually keep the quality up as far as, and wait, let me actually move this across. All right, there we go. Okay, so as it goes, 52-week high is $414. Again, we saw their report come out with, okay, earnings weren't as what people were expecting, but they did grow strong. Cash flows were actually positive. So overall, I think that the Tesla bulls, from what I saw, were pretty happy with the results. I don't know if chat wants to say their opinions on it. I'll kind of glance over this to see if anyone has anything to say about it. How did they not say anything in regards to China? Is that something that shareholders should be aware of? Plus, no, because that they're not really going to talk about those details. So that we have a question coming. Okay, this is upsetting. If every time I click away, it goes away. Oh, can you guys still see it? Yeah, you guys can still see it. It's the live streamers that will not see it. All right, so
I can't see anything but the three of you, and then there's a watch stream to my
If you
left.
click on that button, you'll be
Oh
able
yeah,
to
you
see
got to
it.
click on watch stream.
But it's just a ticker symbol.
All right, sweet. No, this is better.
Yeah. So either way, this is always going to be there for you. So I'm going to probably switch it back to this for everyone watching the live stream, because the other way doesn't work as well, because then I have to constantly just be on the other application.
Oh, do whatever you got to do, man. We're just having fun here talking about stocks.
No, yeah, that's what it's for.
Off your phone.
I just want everyone to be able to see what we're talking about at the very least. So, yeah, the comment coming up from Hayden is actually saying, well, how do they not say anything regarding China? Is this not something shareholders should be aware of? Plus, what's going on with clips and China in general? Or, sorry, chips and China in general. And that doesn't mean potato chips. So I know Cole was thinking, like, potato chips?
I'm going to throw this out there. I haven't done that much research on China, but from what people are saying, and again, I haven't done that much research, is they're about to be in the middle of a debt crisis.
Mm-hmm.
Most likely from just building cities for no reason.
Yeah, if I've learned anything from the last 2 months of Graham Stephan videos, I think China might be in trouble.
Oh, yeah. I've seen the thumbnails, yeah, where it's like China's destruction. There's like a time
It's like a Chinese
frame.
flag on fire.
It's gonna die in like,
Bro,
30 days.
we're in Discord, so I'm more comfortable talking about this, and I really don't care if it's recorded.
It is.
amazing.
We're live. We're not. No. This is not streaming to the Discord members. This is on YouTube.
Oh, all right, whatever. I don't care. I love the fact that the market is waking up to the fact that those four dudes in Millennial Money are a bunch of morons. It was baffling to me the entire time it was going on. I'm like, what is this, man? Graham with his cookie cutter, squeaky clean appearance, and then Andre Geek slaughtering everything that he put out. And it's like, I just wanted to ask these guys, did you guys even read a book before you started your channels?
Andre actually, for the first time, he's made this mistake for over a year now. For the first time in history, his newest video, he correctly explained why bond prices fall when yields go up.
And
he
by
got
the
that
way,
wrong in every video.
Yeah, that's actually something you're supposed to learn in like the very early classes. So congratulations to Andre, because yeah, he kept getting it wrong in his older videos. That is true.
But yeah, dude, this is the conclusion I came to with all that stuff. What people wanted was somebody else to do the work for them, to tell them what stocks to buy so they could be rich. And they just thought, I don't in any way understand why you would listen to somebody like Jeremy over time and not get that this guy is a complete moron. I don't understand it.
Yeah.
It's like I watched 3 videos from that dude, and then I go, this guy is just dumb as a box of bricks.
We have another comment coming in though regarding Tesla, and it's actually saying, so Keithan is saying,
those guys.
screw those guys. No, we'll keep talking about it, but I want to make sure that as a Tesla bull of sorts, I think the quarter was decent. Misses/beats aside, they managed to grow 50% in a recessionary environment. That is pretty amazing considering during COVID they only grew 20%.
And it's what, like the cheapest one's like $40,000?
Yeah. Let's get the exact price, but it is. It's still pretty expensive for the average person. That is true. And but that goes into the question. It's not. It's kind of like a luxury goods product that your market. They're probably dominating and taking market share away from the other luxury car makers. So.
And do you tell me how you think consumers think on this? Would somebody go, wow, gas is $4 a gallon, so I'll pay an extra $10,000 for an electric car?
Oh, I tell everyone I know, it's like, you're not buying this to save money. That's a lie.
Well, I think
that's a lie you tell yourself.
Like, regardless of how expensive the price of the vehicle is, there's somebody who's like, man, gas is so expensive, might as well just get a Tesla.
Yeah. I mean,
not from like a logical conclusion. Just
I mean, there's a lot of rich people out there. There's a lot going into Tesla. I mean, a lot of people think I'm just this Tesla bear. I'm not. I think Tesla is a good company now that I can see a couple of quarters of their reports.
Wow.
The problem is it's just massively overvalued. You are paying too much money for it. You're not going to get it out of the company. Ben Graham talked about this in The Intelligent Investor.
You guys are seeing that you can't buy the Tesla Model 3 long range anymore. Limited inventory. I wonder if that's because too many people are trying to buy.
Well, I think the reason earnings were so good, Fabio, is a lot of people have been watching Stephen Colbert lately.
Oh gosh, okay, don't even start, guys. He's gonna say the joke. Okay, haha, you should just buy a Tesla because gas is up. All right.
Well, dude, I take all of my information from Stephen Colbert. That's why I got the COVID jab like 17 times.
I like to diversify myself, so I watch all late night host.
Jeez.
Yes. Do you know how frustrating it is as an amateur comedian to watch those hacks go up there and tell their stupid jokes?
Who? Did you see Corden got banned from some restaurant for being an asshole?
He's a fat a-hole.
Yeah.
All right, let me actually see. No, not.
But so we looked this up to see, can you get the cheapest Tesla you can get is 47,000?
Yeah, the cheapest one is 46,990. You are correct. With no other additional things, because I think you can add. I'm pretty sure you can add paint, and you can change the rims. You can actually downgrade to like the Aero wheels, and then you can upgrade on the interior. So we can let's make it as cheap as possible.
Bro.
And
included. Fabio.
Yep.
I'm not gonna own a Tesla.
Yeah, you are.
Until I can buy one for $5,000 to $10,000.
No.
I'm gonna buy a used one. I don't buy new cars.
Well, let's actually, Fabio. Let's just go. You've convinced me. Let's go ahead and buy this.
You want to buy it?
Yeah, right now.
All right.
In fact, we'll let chat. Whoever does a super chat for $5 can pick the color.
Yeah, $5. You pick the color. We're not buying a new Tesla. We're gonna do a Tesla giveaway. Oh
yeah.
Oh,
guys, if we hit 100,000 subscribers during this stream, we'll do a Tesla giveaway.
The one I got is blue, and I'm biased. The blue is awesome. The blue is fantastic. I'm telling you.
Connor says they increased prices recently to. Hey, Echoes gets to pick the color.
Oh, bump. All right, you get to pick the color, Echoes. That's what that means.
Connor says Tesla increased their prices recently to decrease the backlog of orders. I know they have been over a year to get a Tesla or something.
Who had to wait a year?
No, that's just what I've been hearing is people saying like, yeah, I had to wait a year to buy a Tesla.
Well, I had to wait a decent amount of time, but I didn't get the base model. So
yeah, we know you didn't.
wow, okay, when you say
Oh wait,
like that.
Fabio, when's your Tesla supposed to come in?
No, it's already here. I sent the picture in the group chat. I was thinking about doing like a review video, but I decided not to.
Why?
Because it feels conceited, I guess.
It's not. You bought a new car. You're proud of it. Show it
Yeah, when
off.
Everything Money did their Tesla review video, it started with Mo driving around in his Tesla, so the viewers knew he owned a Tesla.
All right, I'll do this because I want to hear if the audience desires me to do a review video of it. It's not gonna be like it's a couple months old now, but it's technically still a new car. It's the new interior and stuff like that, so I can basically give.
You're at the perfect point to do a review. You shouldn't do a review when you bring it home that day.
That is
Like
true because I can tell everyone like, yeah. I mean, I'll save it for the review then, my opinions. But all right, I'll keep it as that.
Bro, there's nothing arrogant about review. You can afford a Tesla? Great. Give me a review. I'm actually interested.
I mean, I've already it's been a great car, and then I just upgraded to like the newer version, and then I think it's even better now. Like the interior is pretty.
Now it's conceited, Fabio.
Oh my god. Well, okay, fine. I'll talk about my chair instead because I'm actually really happy about this purchase, and I'm telling you, if you're a work from home professional, today's sponsor. No, I'm kidding. It's not. I'm not sponsored. This is like an actual opinion. I'll bring us back now because. Here, I'll stop sharing the screen because we're not talking about the Tesla car right now. But, yeah, wait, what? Yeah, there we go. So, no, all in all, I think that this chair or a good chair to have in your home office is a fantastic idea. I don't know. I'm telling you. Because this one's, like, really good for my back. This one's a steel case, which, by the way, it was an Everything Money stock. Fun fact. Didn't know if you knew that. Steel case. Ticker symbol is SCS, I believe.
And Everything Money stock.
What does the fundamentals look like?
Oh no, it's a terrible business to own. Like you don't want to be owning this, but it looks cheap. Like it's one of the stocks that like would pass the filter of theirs, but not really a good business to be involved in at every point in time. Very cyclical, very dependent on another Here we go. We got echoes again.
Fabio, you said the part that sold you on the chair was the armrest made from the ivory of African elephant tusks. It was the last of its species.
The leather is made from the hide of Tasmanian.
It's actually not leather. I could have paid a lot more for leather. It's this weird material. But it's not leather.
Tasmanian tigers. We don't even know if they're still around, but they're killing them to make your chair.
It was a lot more expensive to get it in leather. It's significantly more. But I was like, no.
Okay. Wait. Okay. I want to look at the underlying fundamentals of this business Paul bought. Because,
yeah.
I mean, this is what I'll say about Paul. The only reason I've kind of crapped on him is because he just thinks he's smarter than he is.
He has a very large ego.
I'm like, bro, the market will humble you no matter how much you think you know.
Cole, what is the thing you always tell me, Cole? Cole's like, well, value investors only look dumb in a what?
In a bull market.
No, because
But the funny thing, Cole.
So he's the whole last 2 years.
Bro, what is going on? We are getting showered right now with super chats. Bump. Yeah. They're just saying "roo."
Guys, if we get just $2 more, they're gonna be able to save that elephant.
$2 more, and they save the elephant. This is what.
So basically, the last 3 years, though, Paul on his channel, he's been saying yeah, guys, I know my stocks haven't done well as Tesla and everything, but just wait for when there's a market crash, and then we'll see you look stupid. And the market crash, and all of Paul's stocks are down 70%.
Wait,
Baba and Intel and stuff.
Can I just say one thing? How the Capital Mindset subscribers, I don't know if this is, it's trying to, oh my gosh, more. They just keep piling in. Bump it up, bump.
All right.
Thank you, Jungle.
Man,
Thank you, Echoes.
your mom again.
But I love someone just said, like, value investing is dumb no matter what, Folio 2022.
Yeah, so I don't know if you saw it, Jay Nuggy, but yeah, Paul made a video saying, like, this is why value investors always look stupid. And he just explained, he just like goes over and explains why his stock picks always look stupid. But it's a process, so he's gonna look smart in 30 years.
Yeah,
Later.
I mean, look, here's the thing. I'll say it before, man. No matter who it is, the problem with telling people you're going to buy a stock is this. They pay attention to the price, right? That's what you're looking at. Okay, who cares about the price right now? It's the price in 10 years.
Yeah.
It's like, are you making quality This is all I'm saying. Stop paying attention to the price in the short term. I mean, you know what I mean? It's like, look, you can just look at Smile Direct Club and go, okay, their liabilities are so much greater than their assets. I don't even need to know anything more. I'm just not interested.
What, another?
Yeah, dude. And then with that, Fabio can he's officially going to put in his resignation letter. It's a $199 from Echoes. He said, "Roo, hoo, hoo, hoo."
It hasn't come in yet for me. Oh no.
Yeah. Okay. I'm looking at Steelcase. It's trading below book value, which is good. My problem with them is they have negative operating cash from 2021, so I don't know what they did there.
Yeah.
I don't know what happened.
We'll talk about it actually right now because I have it pulled up. You can probably see it on the screen. So
I'm looking at it in stock analysis right now.
All right. Well, what do you see there? You can probably share your screen, and then I can actually stream it.
Yeah, I've got it in the 8 pillars tool right now.
It's probably
okay. What's it telling you?
It's telling me everything looks good.
Oh, this one came in. This widget's like hit or miss. More money. Woo! Oh my gosh! All right, that's it.
Calm down.
Echo's going nuts here.
Yeah, he sent like $30 so far.
Swag Piggity Fig says Fabio's financially independent now. How does it feel? It feels like I can go save an elephant, as Cole says. So I'm gonna pull up some Steelcase financials here. No one asked. We never even said we were going to Steelcase in the.
While you pull it up, is this true? Somebody said Jeremy's thesis or Smile Direct Club was that after COVID ended, people were gonna want to smile more with the masks.
Yeah, that was his bull thesis on it, and I'm like, this is what I go back to, and I'll tell you, it's like this is something I never pointed out about Smile Direct Club, but I should have. I can just go and look at that piece of crap and just tell you not to buy it solely by the fact that the liabilities are greater than the assets.
Bro, Echoes is going nuts.
Yeah, and even
I don't even need to do anything more than look at that.
Yo.
I can just walk up to it and go, here, let's put this is what I'd like to say to Jeremy about it. Let's put this another way. Would you buy my house if I wanted, it's worth maybe $250,000. Here, buy my house for $1.5 million. I'm going to release a bunch of termites into it. Then, there's a homeless guy with schizophrenia that might stab you behind my house. And the whole thing is rotting out, but I want $1.5 million. And I'm going to put new people into the house every year.
Sounds about right. Sounds about right. I'd invest in that. Whatever company that is, I'd invest in it.
As stupid as his thesis is, even if he was right, and people want to smile more, what if they just like buy a different toothpaste instead of going to Smile Direct Club? Like, it doesn't naturally mean they have to go to that one company.
This is what I can't figure out about Jeremy. I know he's dumb. But is he that dumb, or is he getting paid by these crap companies?
No, he's just dumb. You can tell. You can tell. He's excited.
Wait, I have to
He's
address.
optimistic.
I have to address 2 super chats that just came in with questions. So first, bump. I can't. So we got, where do I sign up for the course on this channel? I don't have a course. I'm still working on the free course. I only have the first episode out. So I need to work on episode 2, but I just haven't had time.
Just to clarify, Jay, the last person who asked if Jeremy was getting paid got sued. So.
Oh yeah, that is true. That was confirmed
sued.
on a live of ours. So
What happened?
Cole can say.
Paul said that Jeremy. He said Jeremy was getting paid to buy stocks, and Jeremy basically threatened to sue.
Wait, did my subscribers just go through like, I don't know, like some sort of like big win on something? Because they're all being like extra like givey today or something.
I think I told them all to buy puts on Tesla.
So they're all like, hell yeah. Yeah, because now we have another. So that answers the question, Jungle. There's no paid course. There's a free course that I'm developing. Episode 1's out. Episode 2's out. It's going to come out maybe like within a couple months. But episode 1 is basically just like an introduction. I think it does a good enough job for a very beginner. Basically, it's about index funds, and that's about it. And then we have Swag Piggity Fig is saying, okay, I'll buy your house. Here's the down payment. All right, down payment accepted.
That dude loves hobos.
It's a verbal contract now, I guess. Now, Echoes is treating Fabio like he's at Rick's. Yeah, that's what I was going to say as a joke, because JC's probably in here, and he's probably like thinking the same thing. It's like, wow, what is this? Like a Rick's, digital Rick's or something? This is the metaverse, guys. This is what a digital or a virtual Rick's would be like. Exactly. Well, actually, no. This is already a thing out there. That's already a thing.
Would it be in bad taste if you did a Smile Direct Club commercial where it's like a family goes to an orphanage to see who to adopt, and like they're like, oh yeah, I'm not sure. And one of the kids smiles and it's like super bright, and they're like, oh, let's get this one. And it just goes Smile Direct Club.
Well, do you guys see? Let me pull up Steelcase's actual investor relations.
I've been looking at it the whole time.
It's a cool chair.
All right, let me go to their actual investor relations. Like, the product is phenomenal, and I'll say one more time, thank you, Echoes, for again. By the way, Echoes, if you want us to talk about a topic, I'm pretty sure you've earned it at that point to definitely talk about that topic.
Just ask him if he wants to come in.
Oh yeah, if you want to come on, also just let me know. And unless you're doing something with your girlfriend, but yeah, if you want to come on as well. And then also for the other super chats that went in, you guys, if you guys have another question, you guys can ask it too. Some of you just said super chats with nothing on it or just a roo, but I'll remember your names and I'll answer your question. Oh, you're sick right now? All right, man. Well, hopefully we can entertain you while you're recovering. And we'll try to be even more entertaining. Things are going to get more entertaining because I think at some point we're going to talk about Albertsons, because Jay Nagy does not know about Albertsons. Jay Nagy's been under a rock right now, I think, because he's been investigating something, which we won't really get into right now until we finally kind of pencil that out. But unless he wants to get into it. But
no, I don't think we need to get into
We can talk about whatever. I'll look up Albertsons.
Well, no, we're going to talk about Albertsons. No. I have that already segued away. And then, okay, we have another super chat. Yeah. Thank you, Dan. So in honor of the Kroger video. So I hope the Kroger video did provide value. I think Cole, we were all talking about it in, I think, a call last night, and it inspired Cole so much. That's why we are going to talk about it. It inspired Cole so much. He was like, F it, I'm going to make a video on this last minute. And then I was like, you know what? I should also do a video covering the same topic. I actually shouted you out, Cole, in the video. I don't know if you saw.
I don't think so.
If you didn't, now I'm letting you know. I'm trying to find where I put the stream in.
No, I watched it. I don't think you shouted me out.
I did.
Somebody
I said,
fact checked it.
All right, someone fact check me on that.
What? This cannot be correct.
Oh, you're looking at, yeah, I'm trying to get to their SEC filings.
That you realized Albertsons is only a $14 stock?
Hold on. No, there's something else I was looking at. Stockanalysis.com has errors in it.
Yes, that's why I don't use it.
I don't believe.
But it's good for what it is. It's free. We can't complain.
Yeah.
I don't shop at Whole Foods. That is very incorrect. I am very scrappy. No, I'm very scrappy. It's only in this one aspect that I have, because there are a lot of, I think on YouTube, I don't know if it's the strongman fans, they all think I'm like some certain way, which is completely hilarious. And I find it funny because I'm definitely not.
Yeah, Fabio doesn't shop at Amazon. He actually boycotts all Amazon products.
No.
Wait.
No.
Before
I'm
we
shopping
get
at
into,
Amazon all the way, man.
Before we get into Albertsons, did you see that the dog walker made a video where he attacked himself and then blamed me?
Oh, yeah.
That dude is so lame.
I don't really like. It's his cup of tea. It's none of my business.
And now he's going after Boogie 2988 or whatever. Which.
Yeah, bro. Like, what is going on? Echoes, you get to pick like all the topics for today. It's like you just name it. We'll just deviate to it at this point. But yeah, don't tell my girlfriend Rue, the Rue clan.
Yeah. Guys. All right. So here's the error that I found in the stock analysis. It's telling me that Albertsons is paying a 26.51 dividend, and I was like, that can't be correct.
Well, it's because of the special dividend.
Is that what it was?
Yeah.
This is the first time I've ever even looked at this company.
No, okay.
So,
Well, if we're getting into this topic right off the bat, let's just go for it. So basically, oh gosh, someone donated me Monopoly money. What is this Canadian dollar? No, I'm kidding.
Don't give me Canadian dollars.
That's a joke. That's a joke between me and King.
So Albertsons was worried that there might be some issues with their merger. Yeah. So there's a merger going on between Kroger and Albertsons. And by the way, it's to everyone who saw the video, because I saw in the comments clearly I should have been a little bit more focusing on one point, but I did read it out. So technically I did say it, right? But I should have like focused on that point more. Because I saw there were at least two comments that were a bit confused. Like they thought that you're still going to get the $34. Plus the dividend, so it'd be at like 41.
Yeah, exactly. So they still think, no. Because I read it out, the announcement from the company. So technically I did, but I didn't think that. Sometimes you don't think that you need to explain it further or highlight a certain point. That's why I like doing things live, because someone can be like, oh, wait. I don't understand that. Can you explain that? Can you delve a little bit deeper into that? When I'm doing a recorded video, that's not happening. So I had to address it in comments to those two people. Hopefully I answered your question if you're watching this live stream. But yeah, you're going to get the special dividend, and then it says it adjusts the price for the amount of the payout. And that is according to the announcement proceedings by the companies. So
the reason they're doing a dividend is because
regulatory to appease regulators. But it's not this crazy opportunity merger arbitrage potential that you think. Yeah. It would actually have to fall a lot more. So,
bro, I'll tell you exactly how much would be the beginning of where I would be interested in this company using my new technique. $4.536 billion. That's 1.5 times shareholder equity. That's when I'd start looking at it. Why? Because it makes more sense to me to put money into my tax advantaged accounts.
Yeah, so I mean, have your threshold.
It would be a no-go. I wouldn't even think about this company. It's trading at what, 3 times that?
Yeah. No, for sure. By the way, no, don't worry. I saw someone's comment. I'm not putting up right now, Andre, because I'm addressing Kingdom of Finance's question with the super chat. I'm not going to delete this unless Cole cracks. So if it's gone, blame Cole.
Cole say something messed up in a minute.
No, he's going to control it because, look, he's going to come after you. Andre's going to be upset with you because he really wants to know. He wants to hear us talk about Olaplex, which we'll get to. So,
who?
Olaplex, which is a stock that fell 56. Go brief yourself right now. Pull up their chart, Jay. Just look at the stock price these days. It's down like 50+%
in a day.
What's the ticker symbol?
OLPX.
Or
OLPX.
Is it OLPX or it might be something? It might be OPLX.
Olaplex Holding.
No.
Is that it?
No, I might have said the ticker wrong.
OPLX. That's down 50%.
Yeah, it's OPLX.
OPLX.
Oh,
Yeah. Okay, it is Olaplex.
OPLX.
Just wanted to make sure. All right, I had to check for myself. So yeah, it's down to $4.24, 56. We're going to talk about this, but finishing off Albertsons and going up. Well, let's first talk about Kingdom of Finance's comment, which is two companies.
Hold on. OPLX.
Correct.
Okay, I'll find it. OPLX. All right.
Oh, sorry, OLPX. OLPX.
That's what we told him at first.
Yeah, that's when I said first. Yeah.
Yeah, OLPX.
OLPX. Olaplex.
Hair replace system?
They do hair. I don't know where you said hair replace. I don't know if they do that.
Yeah, it's Olaplex Holdings Inc. I think it's the first thing you put.
Yeah,
I got it.
Should be $4.24, down 56.69%. Cool.
All right, I have it. Let me look.
Okay.
Great
We're gonna.
buying
Okay.
up.
No. Someone's right. Steve is right. We got to keep it organized. We still get to finish Steelcase because we were asked about Steelcase. Then we'll get into. We'll finish off ACI, and then we'll get into Olaplex. Another one. How? Where do you see that?
Hey man says G Nagy was excited by the prospects of hair replacement.
Bro, it ain't gonna happen for me. I've accepted that I will be a cue ball.
You look like you belong in Vice City.
All right, we have a second. Okay, we have a second super chat
Official
from Kip.
1970s dead stock disco shirt.
There you go.
All right, so we're gonna address Kingdom of Finance. Can you talk about why Etsy is better than Amazon? Okay, this is because Kingdom of Finance has told me as a friendly bet, but he's kind of forcing me to go down this path when the setup is really good for Etsy. I don't concede, and I will not talk about why Etsy is better business than Amazon. Maybe a component of Amazon, it might be better than that. But as a whole, no, I don't concede that point. But thank you for the super chat, and you're fun as always. And then
I don't
Do Steelcase.
All right,
Okay.
so we're doing steel case.
Well, I want to get to
the
the super chat real quick because this is just a shout out from Kip Fleming, PhD. This widget does not let me bring your comment up, which is dumb. But I see your comment here. So from the east side, but I keep that Smith & Wesson. All right. Wait, the stock or the actual product? I assume the product. So right on, man.
From the east side, but I keep that Smith and Weston.
No, Wesson. Not
It's
West.
Wesson.
That's not a pun.
No, I don't think it's a pun. I think he literally means he has the product.
It was funny. It was funny.
I don't think it's... All right, so going to the Steelcase question. The Steelcase chair, the product is phenomenal, right? And I'm going to share, again, my screen with you guys so you guys can follow along if you so choose. The stream can already see it, so this is just for you guys on Discord. All right, so Steelcase, condensed consolidated income statement right here. So we do see in 2021 sales of 724, sales of 863 for the same quarter comparison. Cost of sales is where you get a little. Well, you would probably do a measure. I'd say. Let me see, 518. I'm just gonna do it on my phone because I don't want to disrupt the computer. 518 and 612. That's an increase of 18%, and then 63.3. I would usually use this or do this on Excel, by the way.
Yeah, I would do it on Excel, but I don't have like $30 a month to spend.
Oh yeah, you would use. Okay, so actually sales did improve relative to cost of sales for that quarter, and then I would look at the same thing for the 6 months and the year. Now, one thing that is kind of something you need to know about the business. A lot of the business that they do is B2B. So they do have like the B2C. So I didn't go directly through them. They do have a dealership network. And so there is a B2C component, but most of the business is done B2B. So they're going to go to a large enterprise and say, hey, you have an office, right? And they're like, yeah, we have an office. And then they're like, well, do you want chairs for that office? They're like, yeah, we want chairs. So they'll sell in bulk agreements. And now if you look at the balance sheet, which I kind of took you guys over, as you can see, accounts receivable, which is money that is owed to them Jeremy pun, by the way. That's a joke. But technically, yes. But, it's like, where's my money? Kind of joke.
Yeah, well, dude, it's owed to you, but then it comes down to whether people are going to pay.
Yeah.
Go ahead.
Did you watch that clip, Jay?
I've been incognito, man, going down. I've been balls deep into 10Ks trying to figure out what Ben Graham was telling me, and I think I figured it out.
So there's a clip.
I've been basically silent.
There's a clip of Jeremy talking about Tattooed Chef, and he's looking at the accounts receivable, right? Is what he was looking at, Fabio?
Yes.
Yeah, he's looking at accounts receivable, and he's like, Tattooed Chef would have a lot more cash on hand if people would just pay them.
Yes. So, because JP's asking, can you explain the Jeremy thing? We just did. That's quite literally it. So, he was
getting mad that there were accounts receivable, apparently.
Bro, here's the thing, man, that he can't see. This is what's getting processed, man. Everybody's weighted average cost of capital is going up now. And the risk-free rate is killing everything. And that's what's going on. It's just that simple. Yes. Market has not caught up to these interest rate hikes. And they're probably not going to for almost a year.
Yes.
I think we'll see maximum pessimism probably about a year from now.
And you have to also understand, like, stocks, they have like two factors in play here, because they have earnings and they have the cost of capital measure, like what we use to actually discount those future cash flows, right? What is that discount factor that we're implying there? But bonds, for example, only have one, which is like just the implicit risk premium and the actual, risk-free rate. So it is what it is, right? And so some people don't really know that, and they're getting involved with all these, extremely risky stocks, or they got involved. Technically, yes, they got involved with these extremely risky stocks, not knowing that what they were getting themselves into, following these very large channels that, they basically try to, they do kind of make you feel good getting into this, right? Like, you're going into this with a tribe, so to speak. Like, you're not doing it alone. That's how they make you feel.
Well, bro, here's the thing too. This is what everybody wants. You want a robotic approach to buying stocks that just makes you rich 10 weeks from now. And it's something we've said the whole time. It just doesn't work that way. Like, I had people coming on my channel and going, why would you want to get rich when you're 70? I don't want to get rich when I'm 70. I want to get rich now. And I'm like, yes, that's also what I want. I just live in the world that I have, not the one I want. It's like, bro, this is hypothetically what I want from the market. I want everybody to give me their shareholder equity for no reason, for free. I don't want any of the liabilities. I just want it for free.
So you want to go to someone's house and say, I'll pay you $5 for this house. We know a guy who does that.
Yeah. So, it is what it is. Reality is just catching up to people. And, at work, somebody was asking me, they go, I bought Target stock. Should I sell it? I looked at the numbers and I go, it's the high end of fair value. Why would you sell this thing? Just hold it. And I told him, it's probably going to crash by a lot, but that's a good thing for you. Now those dividends are buying you more and more at a cheaper price. But he didn't get that either. And this other woman at work was asking me about crypto. And I just go, crypto's death clock has begun.
Yeah,
Crypto only exists because the Fed kept interest rates artificially low for 10 years and then injected money into the economy. So it's like, I could buy Bitcoin, or I could just buy a 4% T-bill from the government. It's like, where am I going to put my money?
Yeah.
There's nothing holding up crypto other than the greater fool theory. It's the tulip bubble all over again.
I see a lot of comments on social media of people saying, like, "Hey guys, I'm looking. What stock should I buy? I'm looking to buy something for the long term, hold it for a while. I'm probably not going to sell it until like next year."
VT.
Well, no, it's that they spend the whole post talking about like how they're holding it long term and you find out by long term, they mean they're selling it next year.
Yeah.
And so you're like, oh, so you're not long term at all.
But remember what I told you? Everybody's looking at price and not value. They see the stock go down, and it's like, well, my stock went down. Yes,
Well,
stocks don't always. This is the problem with it. It's like stocks don't just do this. They do this.
I have a comment.
I made a video about that like a year ago where I said if stocks only went up, then they would be risk free because they couldn't go down. And once stocks are risk free, what are you going to make from them? Like 2%?
You're not even going to make that.
Yeah.
This is what. See, you guys are going to laugh at me, but I'm going to explain my thought process and why everybody's using the wrong price to earnings ratio. Something bothered me about people just saying that fair value of a stock is a PE ratio of 15. Mm-hmm. So what that means is that something like Smile Direct Club is at its fair value at a PE ratio of 15. But here's the problem.
Yeah.
It's a liability-laden piece of crap, okay? And here's the other conclusion I came to. If you're buying a company, its fair value is its shareholder equity plus liabilities. You just bought everything within the company, okay? So if Smile Direct Club or whatever, just pick a stock, right? If you total up the shareholder equity and the liabilities, you have bought everything in the company. How can it be worth more than everything in the company? I get it. What you're going to say is they're paying us cash flows. That's why. But what you've effectively done is just bought a stock at its fair value. So what I'm saying to you is every stock has a different PE ratio. Some of it's going to be in the general area of 15, but it's going to move around. And also another thing that bothered me was the way Ben Graham calculated stuff. And then it didn't make sense to me till I looked at his intrinsic value formula. And what I saw is use different growth rates. So I was like, okay, but why is he using different growth rates? What he's telling you is that the interest rates are affecting it. The Fed is affecting it. And that when the interest rates drop low enough, everything is just going to spring up. Mm. So if you're at, say, 0.64 interest rates, your probability that you're going to get your money out has now increased because the market is just getting irrational. I don't know if that's right, but that's my thinking on it. I think the fair value for a company is shareholder equity plus liabilities. And then you work back from that. But I don't know. I'm going to throw it out there. I don't know.
Shareholders' equity plus liabilities, so assets?
Well, yes. Like everything is contained within the accounting formula, okay? Warren Buffett tells you that fair value of the U.S. stock market is the U.S. stock market divided by the GDP. So he's telling you when those things are equal, that's fair value. So what I'm saying is I'm trying to work back on what Buffett,
I think
all guys are saying. I don't know how it all works, but that's what I've been working on is if Warren's telling you that the fair value of the U.S. stock market is the stock market, the total stock market divided by GDP, how can the fair value of any other company be greater than assets equal shareholder equity plus liability? Now, this is why I wanted to come on tonight to talk to you two and find holes in this hypothesis, because I don't know. But that's what I've been doing, is I've just been sitting around after work going, all right, what is he trying to tell me? I came to the conclusion I'm doing something wrong.
I think there's some nuance that we'll add there. I want to just quickly cover because I think by Echo's contributions tonight, he's definitely deserved us to definitely talk about his question here, which is, can you please talk about Disney? So we're gonna also, we're not going to forget that because I do want to get into that. I think that's actually a wonderful conversation to have. But in Disney,
I'm throwing it out there into the universe to see what everybody else thinks about it. I don't know if it's right.
We're going to unpack it.
Trying to figure out.
We are going to unpack it. Yeah, there is some stuff there. So with Disney stock, I personally have this view of Disney. I really do like the brands. I love the brands of Disney. I don't like the way it's run. I've had this opinion ever since Disney was like my earlier videos on Disney on the channel. Disney's like 170 something. And my opinions really haven't changed. Now, the price right now, I think, has come down a lot. And a lot of the streamers have come down, actually. Because even when Disney was trading at those lofty levels, Netflix was trading at lofty levels as well, which is also another point of topic, because I don't know, Jay, if you saw what happened with Netflix.
Bro, I'm going to be honest with you. I'm completely out of the loop. I've been doing nothing but looking at...
Well, just to fill you in super quick.
No. I'm just telling you what I've been doing. I've been coming home at work tonight. This is why I haven't been making videos. I've been obsessed with this, waking up and just looking through past purchases by Warren Buffett.
Oh,
well,
so
just to fill you in real quick,
Mm-hmm.
Netflix went up after earnings, and Jeremy said that Netflix is the #1 stock that shows the vibe of the market. And so since Netflix went up today, that means the market's risk on again. So these small caps are about to skyrocket.
Bro, I can't wait till this whole thing crumbles around him and he can't figure out why.
Well, the reason why I'm
overpriced trash.
No, but the reason why I'm happy about Netflix is because I own a significant portion of my portfolio of Netflix. So I was a very happy camper. But
Fabio's actually on the board.
I'm on the board of... No, I'm kidding. Yeah. But going into Walt Disney, they were both around the same time pretty overvalued. And I actually want to bring up both charts because I'm pretty sure, you can kind of get both charts next to each other. And you can see where I was making videos about Disney. Netflix was also in the overvalued territory. I was also making negative videos about Netflix. And then I turned positive and am now a shareholder in Netflix. Now, looking at Disney, you can actually see more recently there's been kind of a switch here. I don't know if you guys are seeing it on Discord because you just click the watch with the stream and you can see it. And then looking at Disney, like Disney's brands are fantastic, but I got to say, and wow, it's actually really funny. Look at the price movement. Percent increase over the past 6 months. Netflix is up 20%. Disney is down 20%. It's actually
Can you move Echo's comment?
This is a point I made about streamers a long time ago and why I just don't really like them.
They're very difficult to value.
It's that. Because here's the thing about Netflix. What if Netflix comes out with, I don't know, next Game of Thrones, whatever it is? I don't know how to account for that. Maybe they don't. But the problem is these streamers are just putting out trash that nobody wants to watch right now.
Okay, but have you seen not
Netflix,
okay.
Disney.
I know, and that's.
I want to watch the Jeffrey Dahmer thing on Netflix. I just haven't gotten time. But dude, where I just turned bearish on Disney was that abomination that they called the Obi-Wan series. I quit that.
Oh my God.
You are not. This is what I said to Disney. I just watched the Darth Vader fight, the first one with him. I go, you're not ruining two of my favorite childhood heroes, or one hero and one villain. I was like, I'm done. I'm out. Canceled Disney. And I was like, I had hopes when you guys created The Mandalorian that you were going to make good content. Then you put out the Book of Boba Fett and Obi-Wan. And I'm like, I have no confidence that anybody wants to watch this trash.
Yeah, in the season finale of Obi-Wan, he comes out as a woman.
I know, I saw that. And that's when his force power's amplified by like 5,000%.
Put us here. I'll put us like down here for now, because when we talk, I want them to be able to see us, and then when we want them to see the thing, I just throw us away. But
what I like about Disney Plus, which obviously there's a lot more to Disney than just Disney Plus, so Disney Plus is $7.99 a month, and And you could, it obviously wouldn't have as many subscribers. Disney Plus has The Simpsons on it. You could make a streaming service that only has The Simpsons, and you could charge $7.99 a month for it. You could have just Star Wars, all the Star Wars stuff on a streaming service.
Arguably, dude, that's what Peacock is with The Office.
Yeah, exactly.
Arguably.
No, that's when people dropped Netflix when they lost The Office. Yeah.
My problem with Disney is their terrible writing that nobody wants to watch.
Can I say something with that? So the strategy that has been the winning sauce is the creative freedom that I think Netflix has provided to their writers, and the they don't have the fear that it seems like these other corporations are having in terms of unlocking that creativity. So they're just throwing a lot of stuff out there, and as I see some people in the chat are basically, saying, okay, well, there's this show that's bad, there's that show that's bad. Well, first of all, since when has ever a live action anime ever been good? I have yet to really see one. That's for one.
Yeah, there's never been a good one.
Yeah, there's no good one. First of all, because I saw him at Cowboy Bebop, and I was like, bro, there's like.
I didn't see it, but Battle Angel got good reviews.
Oh, Battle Angel was a good movie. Yeah, I've heard it was a good movie. But
it took 8 years, but Bleach is finally back. I never made a post about it.
Well, and then Netflix has been making really good strides in acquiring anime content for their platform. But anyways, going off of Netflix in terms of like just all the content recently, I mean, The Watcher, by the way, is a good show. By the way, The Watcher is a good show.
About?
It's a psychological horror about a family that there's you don't really know what's going on, and I don't want to spoil it, but psychological horror, suburban family. All I'm gonna say, very good show. Actually, very, very good show. But there's a bunch of good shows that have been coming out on Netflix, and the writer of Hill House was a hit in horror as well, and he's come and made a bunch of shows for Netflix because they basically given this guy the clean, just have at it, my friend, and he's done it. So it's come to the point where, by the way, I see in the chat a lot of people are saying that Netflix is better. Let me remind you guys that when I was making the Netflix videos, when I turned positive, the comments were negative. The comments were negative, and in the live streams, I still got questions like, but Netflix content is bad. And then the thing is, I did my own research using the data that we had available, publicly available. Everyone could have seen it. And the rankings of shows, it was consistently Netflix. And, recently, I think She-Hulk kind of made it to was for brief moment in time, for example, was top 10. Briefly. But it never stays. They never stay.
Because Disney is burning their fans.
Yeah, I know, but
there's only so many times I can give you money, and it's not even like I walk away and I go, it wasn't bad. It was pretty good. I enjoyed it. I thought it would be better. That's one thing. But Disney is putting out trash. But that's why I wouldn't touch them with a 10-foot pole.
This was my point, though, in those videos about Disney, because I had a brief experience with Disney, okay? And I don't think I like the way things are just done there. I don't think the company's well run, personal opinion. And I think that there's a lot of potential there, but it's so bloated, so bureaucratic, so slow moving, slow to change. It doesn't have it doesn't have that spark. Now, it's so strong in terms of the brands that it owns that I don't think it's going to suffer. And there's a huge fan base of Disney that's like, oh, you just smack me again. And then and here, take my money. They don't care. So they just they come out with something else in Star Wars. And even though, you got absolutely shafted with all the other Star Wars content, they'll probably watch it.
Well, that's The Mandalorian. The Mandalorian, good.
Who's the finance YouTuber? He goes to Disney every week and uploads hour-long videos of him walking through the park.
Oh my God!
Is it Andre G?
No. He's bringing. Don't ignore that question.
It's the dog walker.
Ignore that question. Yeah, smack me again and take my money. Fabio, October 19, 2020. Yeah, these are quotes.
Oh, dude, bro. That needs to be a T-shirt.
There's some
gonna
phrases
get
that have
it.
become basically
Sell that
t-shirtable in
T-shirt.
this.
Smack me again and take my money.
So thank you, Echoes. By the way, somebody said Netflix had better anime than Crunchyroll. Me and Echoes disagree with it.
Well, no, Crunchyroll I think right now is the top dog in anime, but a lot of anime, I think people pirate a lot of anime. Like there's a huge pirate culture in anime.
I would never do that, but
There's a huge pirate culture in anime. So it's
I
like
I would never pirate anime, Adobe products, Microsoft products.
you would never do that. But so that makes it inherently difficult or less valuable. The anime crowd are less valuable as a consumer because they're very piratey. It's like very rampant. I know I'm not an avid anime consumer,
it's
but I know
because
some people who do, and all of them who remain unnamed, all of them pirate. I don't know a single one that just like goes on Netflix and just watch. No, they're like.
Well,
no.
I think there are two main reasons for that. One, an anime viewer is going to be more kind of nerdier to begin with, so they're going to know about piracy. And two, it was the only option. Like there was not, like 20 years ago, there was not anime like coming over to America and being dubbed, so you had to find a way to download it illegally. So it just kind of stuck.
Yeah. That's it. It developed over time. There's always like these quirky reasons as to why something happens. It's funny.
This is just my opinion on Disney. Is like this is what I would tell anybody. I don't think Disney's going anywhere, but right now with the crappy writing, I mean, I just think they're gonna get hit pretty hard until they turn that around.
Yeah, and
Nobody wants to watch woke BS. Sorry. Well, I shouldn't say nobody, but the vast majority of the population doesn't.
I
was excited to watch She-Hulk. You know, we saw how many movies about men did we watch in the Marvel series?
I mean, I don't even think it's about that. I literally think. I mean, I don't know. I haven't seen it. I have no interest actually in watching it. I'm not really a big fan. I never even thought. I thought the MCU after a while it kind of got.
Fabio, she worked with Meg the Stallion.
Who's that? No. You see, and I'm glad I don't know who that is. Who the hell is Meg the Stallion? See, like,
Fabio, that's what I love about you. Bring up a celebrity and you just go, who?
Yeah, because I never in my like I was never part of that caring about. Yeah, I don't know. I have freaking like the little widget that filters out celebrity news. It's worked. I've had it for what, almost a decade. This widget.
Bro, how about this? What do you think of Howard Marks?
Oh, I know who Howard Marks is. Yeah.
Yeah, and not the drug dealer. We're talking about the investor. But
there's a drug dealer, Howard Marks.
Yep.
Didn't know that.
I think that's his name, and he was pretty famous. But yeah, so it's like, I love that I just. Who's Meghan Markle? I don't know. Who's Peter Lynch? Oh, let's talk about Peter Lynch's theories on.
Yeah, I know Peter Lynch. I didn't know what was that name that you told me, Cole, that I thought was made up, and apparently she's a big
Goldberg.
Yeah, I thought that was a made up name. I thought he was trolling me. I was like, "There's no one named Whoopi Goldberg."
Really?
Yeah.
Oh my God, you're out of the loop. She used to be a. I guess she claims she was a comedian, but I don't know. I've never seen her stand.
I like her in Rat Race.
Well, after like she's part of a show that I've never seen before, like the View, which is apparently like a bunch of ladies and stuff.
It's a bunch
you
of
like that show?
No, nobody likes that show.
Oh, nobody likes that show.
It was popular because, and this isn't sexist, it's just true. 20 years ago, there was a lot less women in the workforce. So they had to stay at home, and The View was the only thing on TV during the day. So they were just forced to watch that. And that's why.
Well, dude, here's what I hear when I listen to The View. If you just got a bunch of cackling hens together, and I can't make sense of the idiocy that's coming out of all of their mouths. It's like I'm literally looking at like 5 hens going, what are you morons talking about?
That's
be the equivalent.
Cutaway.
Yeah, well, I didn't actually know that, but yeah, that's how I picture them in my head.
It's Peter's watching The View, and then all of them are just going like, what? and then one of them like lays an egg, and they all start like clapping.
Okay, maybe I did see that, and that's where I got it from. I might have seen that because that does sound familiar.
Yeah,
but
it's old.
I've watched like pieces, like clips of The View, and I just go, who watches this moronic stuff?
So wait, who owns The View? Is it Disney by chance?
ABC?
ABC is owned by Disney.
I think.
No. If it's ABC that owns it, then Disney owns it. So, because I'm trying to keep us back at Disney, because I want to get to the other stocks. So, Disney. Final thoughts on Disney. I think that one of the key points that I did not like about Disney when I looked at it is during the pandemic, like the cruise liners, but not to that extreme extent, they decimated their balance sheet in comparison to before. Decimated it. So you have to contend with that on top of the fact that they're doing the content spend, but anecdotally, I haven't seen the content spend be spent well. And I think everyone, you two, I think kind of agree with that. Jay definitely.
Yeah, no,
he's giving me the stare.
They're not spending. Look, this whole thing could be solved for Disney if you just hired good writers. But they don't want to. They want to play identity politics. And the average person doesn't care about that. They come in, they go, I paid you my $7. I came home from work. I want entertainment. You want to talk about identity politics. I don't want to hear about it.
Yeah. Oh, actually, Swag Patey Fig, I'll disagree with you on that because all the kids that I've ever spoken to, they think it's kind of cringe. That's what they kind of think because you got to understand, like, always like what the adults do is always the,
lame.
Yeah, it's lame. So it's, I don't think they genuinely like it.
I'll maintain that
the loud ones do.
I'll maintain that eventually, any company like Netflix, where it's just a streaming service, eventually the cost of making content is absurd. So like even $20 a month is way too low. Eventually, Netflix is going to have to keep raising that. And
that's a great point in why I don't buy the streamers. I'm not saying I'm right. For me, it's more of a thing where I look at it and I go, I don't know how to value how much this new series is worth to Netflix. So I'm just going to go somewhere else.
Yeah.
But Disney, my point is that Disney has 2 giant theme parks and everything else. And so they don't have to make all their profits just from the streaming service. So they can, if Disney Plus is cheaper than every other streaming service, that's what people are going to watch.
Can I tell you that the parks is the least sexy part of their business?
I can imagine.
It's the least.
Well, yeah, I mean, I would assume it's the least sexy part, seeing the people that go there.
No. But also, it's like it can go wrong pretty quickly because everything flows with it. Because the Disney parks. Okay, I'll give you a company that you probably maybe were thinking about, maybe weren't thinking about. So Disney Parks in Isolation. That's basically Six Flags, which is a publicly traded company. You could buy them. Okay. Or Cedar Fair. Right, that's an example of a company that's just a theme park. Very bad businesses. They can make a lot of money if you buy them at the right price, but it's never going to be the same as Disney because Disney has to build a world around you. It's all about the characters. The characters are paramount to everything else that they can sell on top of that. So it all blends together. Without the success of the actual content, then it doesn't flow as well to the other stuff. So
Fabio, you also something that needs to be factored in about Disney, which is why I don't think they're going anywhere, but it's like, what would be the cost to create another Disney?
Can I say something to Carson's point? Carson, it's that's I don't know, Carson, what country are you from, by the way? Because it's usually what I hear from people from the United States. I'll put up his comment. Because I'll tell you, like. Globally speaking, and Capital Minds has a very global audience. Globally speaking, that's more of an American phenomenon, this whole shebang. Well, actually, Anglo-Saxon, because it's actually pretty popular, the same kind of ideologies within the UK and stuff like that.
Disney is like My Little Pony, and that they're...
Yeah, Carson, you're 40... Yeah, globally, it's not liked.
So My Little Pony, their number one audience is girls between 4 and 9, and their number 2 audience is men between 18 and 25. So I think that's what Disney Plus is. It's kids between 5 and 9, and then guys in their 30s.
Guys in their 30s? Damn, man.
Here's the great thing, and I will say about Disney, in any amusement park. If you take your kids there, you get to be a little kid again.
Yeah,
I mean,
exactly.
that's a big charm. So like I'm going to take my kids to see all this stuff, and I'm just going to be a little kid and watch them have a great time. That's got to be factored in.
Mm-hmm. Yeah, they're always going to have that power. That's the benefit of Disney. Like they do have that. There's no one else that even competes on the same level for where you think, okay, I'm going to go take my kids on a vacation, and they have everything for you, the whole shebang. They have, the resort that you're going to stay at. They have your transportation ready for you. They have all the food you could ever want. They have different types of experiences while you're there. So like, you go to the parks, then you can go to Disney Springs to do your shopping, which is also a nice place. Good restaurants, completely overpriced for what they are, but, supposedly good restaurants there. And just telling you they're overpriced.
If somebody said, "Hey, Cole, I've got my kid's 5. We're looking to like form a memory for the family," I would say, "Okay, go to Disney World." I mean, that's the first thing that comes to mind.
And that's a lot of it.
I wouldn't.
But
that's not. Yeah, I don't use me as an example.
All I was saying is, okay, great. I don't think Disney is going under, but they have to solve the crappy show, crappy writing problem.
How much of Disney is Disney Plus? Because we've been talking about just the streaming for a while.
No, well, remember, I think it's connected the content. Movies, shows, all of that drives the character, and the characters are what bring people to everything else. I want to bring my kids because my kids are in love with
so we haven't brought up.
What?
Well, we haven't brought up Hulu or ESPN Plus.
I don't care about either. I'm kidding.
Okay.
No, ESPN Plus, good cash cow. It's what it is. They use the ESPN numbers to boost up the way their streaming numbers looked. They did that, but
isn't like, I don't know the exact number, but something crazy like 20% of all these streaming service subscribers are just people who they got a free subscription with their phone plan or something.
I know that, for example, T-Mobile was doing something with Netflix, but they have been doing that. I know HBO Max was AT&T because that's what I was on, but now that's removed. And I'll tell you, the only one that I'd keep, I'll be honest, the only one I'd keep is Netflix. I could care less about the others because I don't really use them. I'm on YouTube and then Netflix, and then my wife was sort of the one who would bring us on to Disney Plus, but not really, because the thing is, HBO dominated their demographic with a lot of different types of their shows. Like what's that? There's a show they make.
What service?
HBO Max. It's a show that's definitely it's targeted towards the women demographic. They had a very successful show in the 2000s.
That was wild.
Not Pretty Little Liars. I don't know why I'm thinking that one. It's the one in New York with the girls who are going to.
That's in the city.
No, not that one. But that's another one.
You're talking about Girls?
Yes. No, Girls and Boys. But it's a school. Someone's probably saying
Seinfeld.
No, it's not Seinfeld. No one's saying it yet. No, that not.
What? Explain it more.
So it's girls and boys. It's they go to a school. They're all in high school.
Magic or
no magic's involved. It's just like
Fuhat says dead.
No, it's not dead. No, he's just laughing. I don't know why he's. I don't know if this is funny, but no, it's definitely not Lord of the Rings. Stop it. No, it's not Saved by the Bell.
But it's predominantly in New York. You're in New York.
Yeah, you definitely know you're in New York City. They made a recent show. They brought it back. They literally brought it back. They made a new version.
When does it bring it back?
Is Zendaya in it?
No, it's not Friends. Gosh, no. Everyone's scared.
Zendaya is the super hot chick in
right?
in the latest Spider-Man.
They're all from wealthy families, and it's through their high school era. Gossip Girl. There we go. Gossip Girl.
Okay,
that was their content, and they just created a new version of Gossip Girl. Well, the newest version of Gossip Girl isn't as successful as what Netflix has come out with. Netflix has gotten that demographic. That's the most important. No other demographic really matters. I'm not even joking. Like most things. Like I've explained this sort of before. For the corporate mindset, we want to target the most effective demographic. And that show is very powerful in trying it. So, for example, the one that Netflix has pretty much gone in and just taken it is one of them, because they've had a bunch of them. And I've noticed this. I've started to notice this. Emily in Paris. Emily in Paris is one of them. There was one other trash movie or show. I think it was bad, but it went through like a phase where people loved it. It was like 360, I think. It was a very sexualized show. And then there was another show that was a huge hit, and people are really excited for the next one. Another kind of sexualized show, not as like crazy, but much better written than 360. It was I'm not even remember the name. Basically, but they're making shows that are targeting that demographic really well, and it's kind of making inroads, and they're very popular. I know that my demographic here watching me does not watch any of these shows, so yeah, young women is the most important demographic. The Becky Index, guys, do not sleep on that.
Okay, what was the next stock? Because I'm tired of talking about Disney.
So we had Disney, then segueing Disney into Netflix just because I wanted to brag about my gains, bro. No, I'm kidding.
Okay, well, I'm fine with that. Good. I'm glad you made money, man.
And
are you gonna funnel those gains into Tattooed Chef?
oh, of course, I'm already planning on selling it all, and I'm gonna funnel it right into Tattooed Chef, where I'm just basically gonna become, at this point, because Tattooed Chef's worth market cap of $1. I'll be the entire board, and we'll sit around me, and I'll just invite you guys over, and I'll say, what should I do with the firm?
And this is what'll happen. You'll service a nice meal of Tattooed Chef's food, and then I'll go vomit in the bathroom.
I like bring in the food, and then like Jeremy comes out, he puts out all the food in front.
That was actually a plot point in Gossip Girl where they were doing like a beauty pageant. This girl's like, "Oh, I'm way too fat," and then she like eats Tattooed Chef and throws up before the competition.
And wins. Let me tell you, in my mind, what is more appetizing than any Tattoo Chef product. Remember in the Indiana Jones movie, I forget which one, where they brought out a bunch of monkeys where they had cut the head open? I would rather eat those monkey brains every day of my life than eat one more bowl of Tattooed Chef.
My God.
Yeah, I remember when Indiana Jones was like, Tattooed Chef. Why did it have to be Tattooed Chef?
You guys are hilarious. All right, let me see this. All right, so I want to bring up, so we have some ideas. We wanted to finish off Albertsons and why we were even talking about it. Because we already discussed the special dividend. We got all that out of the way. But why is it an important topic? Well, Jay, because you've been living under a rock recently, we want to bring you up to speed on this, because one of your favorite YouTubers recently, I think you've recently fallen hugely in love with them. Like you never doubt anything they say recently. Everything Money. They came out with a video, and in the video, I think Cole's dying to say it because he's already smiling. Go ahead, Cole. Take it over.
I forgot you could still see me. Yeah, so the merger is, and tell me if I say some words wrong or something, Fabio. The merger is at $34.10 a share, but it includes a special dividend of $6.85, I think, or something, which is part of the cash consideration or whatever. So the point is, right now, if you know for a fact that the merger is going to go through, it should be trading at around $27 or so. Because it's $34.10 minus the dividend, and that's where it's trading at. Surprisingly, it's basically trading at exactly where the merger price will be at. Paul wanted to hurry up and get a video out super fast because he saw lots of juicy views in front of his eyes, and so he said, "Yeah, guys, it's the merger is $34.10 a share, and it's only at $27 a share right now. So this is like a 33% arbitrage play if you buy it here. But because the price is so low, that means the market thinks that this merger is not going to go through and it's going to get denied. But if he just like read an article about it, he would know that it's trading at the exact right price." But
Well, I said it earlier. I'm going to tell you the exact problem with Paul. He thinks he's smart. Here's what I do. Still to this day, when I'm looking through 10Ks or whatever, I go, yeah, I'm retarded. So I'm going to employ like Ben Graham's techniques into this because I'm too stupid to figure this out. Like I just go into everything assuming I'm dumb. And then a lot of times I don't get it. Paul assumes he's smart and has the answers. He doesn't. Nobody has the answers in the stock market. You just need to formulate a realistic formula that you can use to buy stocks when they're undervalued. What that is, you're going to have to figure that out on your own because nobody on YouTube can give you a robotic formula that just works every single time you buy a stock. Every situation is different. So, it just goes to my investing thesis that, the average person is best off in index funds in tax-advantaged accounts.
You're wrong. No, I'm kidding.
Yeah, exactly. Do you think if Paul had to grow up lower class and he was never handed millions of dollars, do you think he would still have a huge ego, or do you think that caused it?
I think Paul's never been punched in the face.
That's true. Yeah.
And that's a very, very humbling thing to happen to you. Especially when you can't do shit about it because the person's a better fighter or they're bigger and stronger than you.
Yeah, when you're 5'4".
That's the problem with Paul. He just assumes he's smarter than everybody on the internet. And then he influenced Mo, who I don't know, I would have to talk to Mo, but I get the impression he's pretty dumb.
Yeah, Mo's only there. I believe he went to college with Paul's brother or something, if I'm remembering.
Yeah, Fabio broke it down to me one night, and we were cracking up, and I'm not going to repeat it.
I got you.
That was off
because I'm not blowing up anybody's spot.
Paul is actually going on. Paul's trying to start a new business. He's already got 8 or 9 businesses. He's looking at opening like some kind of like speech business where like basically he's going on college tours next year. He's going to different colleges and giving speeches.
About what?
Investing.
I think it said something about mindset or something.
Paul,
Well, this is classic rebranding, by the way. But
we'll see if Paul's techniques work out, but you're not going to know for 5 to 10 years. Like, when I mock Jeremy, it's because I can just look in at the underlying fundamentals of a company, right? But when somebody says Intel is a buy and then they lose revenue for 1 quarter and you call the person a moron, I just go, this stuff happens in investing.
Mm-hmm.
You know what I mean? I don't really like Smith & Wesson, probably because I have a greater knowledge of the gun market than Paul. But when I look at the underlying fundamentals, I can at least understand what he's doing. Whereas, when you take these guys like Jeremy, I just I'm like, what are you seeing that I'm not? That's the question I always ask. Why are you saying this? And the only conclusion I came to is Jeremy's a moron. Paul's not a moron. He just thinks he's smarter than he actually is.
I would. Well, I don't know. Some people would debate me on that, but I was going to say I would agree with you.
I think
it's not
took Paul to a. I think
everybody has their own opinions. I'm not saying I'm right, but that's just my opinion on Paul. Is that he's got a lot of arrogance. So, I don't know, though, because I don't know the guy. That's just the impression I get from what I see on screen.
Do you know what the very first thing in his Instagram bio is, Jay?
Please don't
His
tell
8
me.
or 9 businesses upstairs.
No, it says 128 words per minute, top 2%.
He can type 128 words a minute.
Yeah, he's really proud of it.
Okay.
Yeah, that's his most notable thing apparently.
This is the first thing he wants you to know. All right, so
Hey guys, listen to my investing advice. I can type 128 words a minute.
But this is kind of a growing issue because there's been, a ton of problems like Sleep Number. There's been Walgreens Boots Alliance. There's been Intel. Intel was one. There's been, well, granted, now he's buying more Intel, but maybe now is better.
Hold on. This is what I have to say about Intel. I was looking at the fundamentals, and I don't think Intel is Sleep Number. And we can pull that up if you want to.
No, it's not. No. One's vastly worse than the other.
Yeah.
No.
Yeah, Sleep Number, I wouldn't touch with a hobo's penis in the two of you pushing. But maybe I just don't see the market. I'm like, yeah, okay, everybody likes a comfortable mattress, right? For me, I look at it and I go, this is not right for my portfolio.
Yeah, I think part of because Sleep Numbers, if I remember, are like stupidly expensive compared to other mattresses. And so Paul and Mo were both saying on their channel when they're talking about Sleep Number, they're like, I think they said something like the numbers don't look amazing, but they're like, but every time I ask somebody if they like their Sleep Number, they always say yes.
Wait, but
I'm like, well, yeah, if I bought like a $5,000 mattress, I probably would like it, but that doesn't mean it has like a huge market.
Bro, Swag Piggity Fig is hilarious. I'm seeing in the comments, he would be like, who's Jeremy? Who's Paul? Now he's saying, what is a Sleep Number?
No, I mean, look, here's the thing I think about stocks, right? If you're buying a good quality company, stop paying attention to the price. Because it's not where it's supposed to be in a year. You're not thinking long term. If you go, I'm going to buy this stock and, I'm going to sell it in a year. But another way to look at that is kind of in a similar way. If you're looking at a stock, right, let's say it's trading exactly at book value, right, but it has a 6.5 price to earnings ratio. If I was going to bet, I would bet that it's probable within a year and a half, you can make money on it simply by it reverting back to its fair value PE ratio.
Mm-hmm. If it's not dying. Yeah.
Yeah, if it's not dying. But the thing is, you got to look at it. Like, okay, if a company is trading at book value and you're watching the revenue go up, you're watching the book value go up, and you're watching everything in there, and then assets are greater than liabilities by a significant margin, I would bet on that stock just being undervalued.
So
now, whether you're going to buy it, I would say this. If you don't understand the industry, like I don't understand the bed industry. So it's like that would kind of go into factoring into whether I would buy the stock.
Now, here's a question for you, because this is the problem. Because one of the issues with Sleep Number is that they have a massive portion of their debt is a revolving line of credit. So they're going to have to, and I think they have about 800 something, I forget the numbers because it's been a while since I looked at it, but it's about 800 million total credit facility. And, you're looking at everything and, it looks nice, but let's say you overlook that, right? You overlook that they're going to have to roll that over because the cash flows are not there to really pay that off. And a lot of the debt, by the way, before you ask, was not used to invest back into the business. A lot of it actually was used to
share buybacks.
Yeah,
right?
Share buybacks. They bought back a ton of stock on a revolving line of credit.
You know my opinion on the share buybacks. You know my opinion. Share buybacks are not blatantly a good thing. If your company is trading at too high a value, you are wasting cash
Burning
flow
it.
that could be better put
You're burning
to
it.
developing new products that create new revenue streams.
Mm-hmm.
That's my opinion on the share buybacks and why I don't like the fact that Paul says it all the time. He says they're buying back shares, so this is good. Well, it's not always good.
It's not that easy. It's not
Yeah,
that easy
it's-
to make that conclusion. Precisely.
Yeah, I mean, I think a lot of people are attacking Paul for the wrong reasons. And one of those reasons is you're just looking at the price. Because think about, when the dog walker he basically stole Strongman's video and then couldn't get the debt right. All he was looking at was price.
Smile Direct Club.
Yeah, the dog walker stole Chris's video and then tried to make a video on it and then couldn't even explain it properly. It was almost like watching a special needs kid try to recreate a Picasso on a dinner napkin with crayons.
That was dick.
Well, I redacted I made a video today. I don't know if you got to see it, Jay, but I redacted
I did nothing today but nap and do laundry, and it was amazing.
Well, that's good. I wish I could do that. But there was a comment I used to make that I think then we were in agreement. But I used to call Paul the epitome of an analytical-driven investor without any of the story. I redact that because I now believe that would be offensive to analytical investors.
I made this mistake. And I will admit it freely. What changed me over time is that I just realized if I don't listen to the story, guys, I'm just not creating a complete picture.
Yes.
So I want to listen to the story, guys, and then see if I just agree with it. But
that was my initial criticism. I used the two examples. Everyone knows which ones I used. I used two YouTubers as examples, and neither of them are ever going to change. I think they're both set in their ways. And the other one doubled down on his ways, so it's not going to change anytime soon. I know he might be seeing my videos because he addressed like a critic or something. Not a critic. I would call him. I was constructively criticizing him. I wasn't, bashing him actually. And I actually don't even think this guy's like a bad guy. But actually. I don't know. I'm going to refrain from saying anything because maybe someone says something.
We think he's in the top tier of intelligence for big YouTube channels.
Oh, no. I would prefer him to be in Jeremy's place. But
we're talking about Joseph Carl.
Yeah, so Joseph.
I would say this about Paul. Paul is definitely an intelligent guy. I just think he overestimates how smart he is.
Yeah.
Because here's the thing.
Which I think you could argue means you're not intelligent. If you can't understand.
You can argue that. You know what I mean? Because it's like
some of the concepts are really simple that he messes
that.
up. Like some of them are like really basic.
I agree with you. And so a process I tried to apply is I'm just going to listen to everybody. And if I don't agree with it, I'll just throw out what you said, but I want to hear it.
Yeah.
Yeah. But there's continue. Sorry.
It was because of User. Remember the guy I had on my channel?
Not Sharingan,
That I started digging deeper because I wanted to be able to explain things to him. I was actually trying to prevent that guy from losing a ton of money. And then it turned into both of us didn't want to hear it. It's like and I even told him in that interview, I have no idea what Tesla's intrinsic value is. And this is a video I'm going to make on intrinsic value. Stop trying to calculate it. It exists outside of space-time. Everybody has a different number in their head on any product that you're going to buy, depending on needs and price.
Yeah, since I bring it up a good bit because investing isn't it's not an actual science like physics is. People want to put more attention towards numbers because it makes it seem more scientific. If I plugged in these numbers into an equation, so I have to be right. But sometimes the numbers aren't the full story, and you're putting too much emphasis on them.
That's why I used to say in my older videos, I used to say investing is an art and a science. And then the embodiment or the representation was Paul and Joseph. But what I was addressing to the audience in those videos that I'm addressing now is you want to be somewhere in the middle. Like there's a sweet spot. Some people are going to be more driven to one side than the other. You're going to find your style. But you know, we all I can do is like implore you that it's probably not the best to be, you know, polarized in one side or the other side. It's kind of like
completely agree.
Yeah, it's
You know,
it's kind of like a balance of the two. You need to have both. It's harmony.
do you know why? Do you know why? Like, we both talked about this. What clued me in on Tom Nash was when he was just sitting there saying, analysts use price to sales. Okay, well, you're talking about Palantir, right? And you're saying the analysts calculate the value based on price to sales, which I don't believe. What I believe is we know that your price to sales should probably be between 0 and 3 for this reason. Much smarter people than you figured it out. Just ape their technique and then add to it as you discover new language. But when he's sitting there going, oh, analysts use price to sales to calculate the intrinsic value, I went, then why are you buying a stock at a 39 price to sales?
Did you see Paul sold cash secured puts on Palantir?
Yeah, I don't agree with him. I think, here's my opinion on Palantir. I'll wait and see.
I think most people buying it don't even know what it does.
Yeah.
I agree with you. And that's part of the problem with numbers investors.
Uh-huh.
That I realized that I was making that mistake where I'm like, okay, but I don't understand the company. I can just look at the numbers, but let's say the numbers line up with what I want. Okay, now I'm going to go look and understand the industry and start asking questions. Okay, here's what I know. I am not the smartest person that has ever existed. All right? So what I'm going to ask myself is, do I understand this business? If I understand the business, I now understand what the numbers are telling me. And that's a big mistake I made. I have no problem admitting the mistakes I've made.
Yeah, I want if investing was just because Fabio was talking about the dichotomy, there's numbers guys and there's story guys. If investing was just about the story of a company, had nothing to do with the numbers, then any idiot could pick stocks. And if it had nothing to do with the story and it was just the numbers, then any computer could invest better than you. So you're never going to beat the market looking at just one of those things.
I agree with you 100%, dude.
Yeah, exactly. Now, there was another stock that, so we kind of covered ACI. We got that out of the way. There's another stock that I want to cover, Olaplex, but we'll get to that, I guess, after.
Can we do one thing?
Of course. No, that's what I was about to ask you. Is there something you want to cover before?
The 1988 10K of Coca-Cola.
All right. Pulled it up right here.
Let me run to the bathroom. You guys pull it up. I'll be right back.
All right, so I pulled up the 1988 Coca-Cola. Jay asked me to have this up for you guys.
And just to clarify for JP, because I just want to make sure he doesn't have the wrong idea. JP says, I don't know why, but I hate Bubbleson the most. I don't know who he is, but just the lore here made me hate him. I like the guy.
Yeah, I don't think there's any animosity towards him or anything like that. I just someone asked me a question here. I might be able to ask with this. Okay, I'll answer this question directly. It was a comment that just came in. Like as a, I don't think anyone dislikes him as a person. Some people have disagreements. I saw that, he deleted comments, and so he needs to be maybe be a bit more open with that, but that's all well and good. And there's a lot of, I guess, cross community. I know that between our channels, even though I'm a tiny channel in comparison to him. He's massive. But yeah, it's just, I mean, hey, we own a stock together. Technically, we're co-shareholders in Netflix. We just own it at vastly different prices. So
This is what I wanted to show the audience. If we just go through the numbers, we could probably figure out a little bit of what Warren Buffett was looking at.
what was the stock price at the time, or market cap?
The stock price this is what I wanted to point out to the audience. Go all the way down to book value. And if you look up what Coke was trading at the time, and the reason I'm bringing this up is because this was one of the greatest investments of all time. If you just look at the book value, it was like $10, somewhere in that area. Warren Buffett bought it for like $3.19 when everybody was saying, you know, they entered Coke and Coca-Cola is over.
Okay.
So we have to be on to something at this point. The problem I'm having, the bridge I'm having to jump that I can't, is Warren Buffett's purchase of Apple in 2016. So I know why he bought this stock in 1988. And then we can look at Oxy and work our way back, because I think part of what goes into his thinking is 1.5 times assets. Don't pay more than that. Why do I think that? Because Ben Graham talks about that, and that was Warren Buffett's mentor.
What was Coca-Cola's stock price in 1988?
When Warren Buffett bought it, it was like $3.19 or something in that area.
Split adjusted.
Yeah, I mean, you're going to go back and do that. But, I mean, for me, this is what I've been doing. I've been just going through 10Ks, looking at the numbers, and I'm like, somewhere in here is the answer on how Warren Buffett does it.
Yeah, it looks like around like $2.50 a share in 1988.
Yeah.
The thing is, it is split adjusted, so...
So, just real quick, Jay, you've been getting some pushback in chat saying that assets can be manipulated with goodwill.
I agree with you. I'm not saying, like, listen to what I'm saying. There's no robotic way to just figure out whether you can buy a stock. What we can do is just use general numbers to see if we even want to look at one, because there's like 10,000 in the world. And I'm not saying I'm right, but this is what I'm trying to track down. I don't know.
You're exploring.
Yeah, that's basically what I'm telling you. All I'm telling you is I'm trying to work through this, because Ben Graham and Warren obviously have one of the best processes. So what can I do to improve my thinking on it? So this is what I've been doing. I agree with you when you say goodwill can just, you know, whatever. You can manipulate it. But that's why you look at other ratios.
Yeah, I think famously Ben Graham wrote that he always has 6 monitors up at any one time.
Yeah, because that's all he does, man.
Yeah.
1976, when he died, he somehow had 2022 technology.
Well, what about the consideration of, he uses the word replacement value, right? Because goodwill isn't really included in that. It's kind of more of something to do when we're looking at the tangible book value. But okay, let's kind of
let me tell you why I hate goodwill. And Chris, and you're probably more knowledgeable on it than I am. It's because everybody just chucks everything in goodwill if they can't account for it.
Well, they have to do it because it's like that's GAAP standards, and so every time.
I know why they're doing it. I'm just telling you my thinking behind it.
Yeah, I mean, we have to like technically account for something, so it's like, there it is.
Yeah.
All right, so it's also interesting because this was like written differently to different standards.
You know what
things have
might
changed
be
over
easier?
time.
Let's look at it. Can you pull up the 10K for GameStop when Michael Burry bought it?
Oh yeah,
did he buy
that
it
was
in
20.
or did he buy it in 2019?
That was 2019.
All right, let me just pull that up.
So Michael Burry buys this company, basically it's a dying company. You have to ask the question. I know what the GameStop people were doing. They were just reacting to the price. But what was Michael Burry reacting to?
Yeah, his cost per share I think was like less than $3 or around there.
Yeah, it's right around book value.
Yeah, but that's basically like dumpster diving for stocks, cigarette butt investing, true
No,
old
I
school
agree
value
with
investing.
Brother, I agree with you on that. What I'm saying is there's probably some answers in there on what he was thinking.
Well, after the call, I'm gonna give you a pitch on a stock that I do know about. I just don't want to degenerately tell it on YouTube.
On the last Fabio stream, I brought up a microcap company, and the next day it went up 25%.
Wait, what? What'd you say?
I brought up a microcap on your last stream. The next day it went up 25%.
Oh no!
But it also reported earnings, so I think that was part of it.
What microcap was it? Type it in the private chat, just in case.
Oh, as if somebody's gonna. I'll type it on my phone.
Yeah, just text it to me. You gotta be safer than sorry. Rather safe than sorry. Okay, but I'll tell you about one that it's gonna be right up your alley on this.
This isn't a stock I like, by the way. I noticed it because it fell 99% because of like insurance fraud.
Oh, okay. No, I know which one you're talking about. Yeah, that one. All right, so I pulled up GameStop. This is 2019, 2018. We're looking at it at the time. You see, like, we need to know the market cap. We need to know the market cap at the time. And the thing is, they've done splits now, so...
Yeah, no, I know. This becomes...
I think I remember it being like a couple $100 million. That's how I remember it. I remember it being a couple $100 million. So let me... I'm going to fudge with it because, you know... 100 million, 200 million, I think. I don't think it got like under 100 million. Might have gotten below 100 million, but 200 million. Let's give it.
But this is my point. Okay, when we go, you're dumpster diving. One of Ben Graham's theories was the cigar butt. A couple hits off that last cigar butt.
Yeah. The only thing is you have to ask the question, because this is a very crucial question that Buffett kind of realized at one point was, is it realizable? In fact, I think...
I agree with you. There's at no point I would have bought GameStop. I don't care. You know what I mean? I'm just asking, what did he see in there?
Well, there was probably... Like, okay, let's go through the assets real quick and kind of see what... Yeah. See, like, merchandise inventories, they're not going to be able to get that value really for it. In a flash sale... It's not really worth it. The cash, though, they had that much cash. My gosh! All right, wait. That's in millions. My gosh! Yeah, that's what he saw right there. Boom, done.
Done. You're looking at 2019, right?
Yeah, done already.
We're talking about when Michael Burry bought it in 2019.
Yeah, no. Okay, we're done. Cash equivalents is 1.6 billion. Yeah, the thing was just like flooded with cash.
And the market cap is around 400.
Current portion of debt. What's long-term debt sitting at? Yeah, long-term debt. Current portion of long-term debt, or current portion of debt net. Yeah, that annihilates a decent portion of that. Inventories, you're going to get something out of it. Accounts payable. Okay, that annihilates a decent chunk out of it. Do you have anything else? Merchandise inventory. I mean, like, you could probably get some. You got buildings. Oh, and leasehold improvements, fixtures and equipment. Yeah, you're not gonna get. Yeah, you wouldn't get all of that realized. Well, that's not actually that's not really the market value. That's just the book value of it. Deferred goodwill. All right, write that whole thing off as if it's nothing. Deferred income tax. Yeah.
Fabio, looking at the short-term liabilities, we're gonna have to call investor relations about that.
Definitely. No, I'm kidding. So, yeah, more jokes. So now, okay, I can see it now. There is a company. There's actually a set of companies, a couple companies that actually fit the description, but they do have a realizable event. And then there's a case study that I always point to, and longtime viewers of the channel probably know which company I'm talking about. But it's a company that it's really tiny. I would not buy this thing right now at all. It's not something I would never buy, but I would not buy it right now personally. And let me just make sure the market cap is, because I think it is small. So, and like as the channel grows, I get more hesitant to show these things.
Yeah.
It is what it is. Yeah, it's $139 million market cap. So I'm going to say the market cap and, all right, vote on it. Do I talk about it or do I not?
Don't name it. Just tell us what you're looking at.
Okay,
Tell
so
me what you see.
the thing is, people who've watched the channel for a while will remember what this company is because it's the only one that's actually having this this situation.
Well,
So
let me first explain this.
yeah,
This is a hypothesis, and I'm actually looking for people to poke holes in my argument.
I got some, but
That's what I'm asking you to do.
oh yeah,
Poke holes in it.
I'm actually
I
going
want you to do that. I don't know if this is right. That's what I'm asking the whole time.
I'm gonna do the exact opposite and go to bed.
oh yeah. Cole's a early sleeper.
I want to go to bed
No
2
worries,
hours.
brother. Honestly, I have about another half hour in me anyways.
Oh
'cause
yeah,
then I
yeah.
gotta eat and go.
We can't be too degenerate. It's a weekday.
Yeah.
So the one part that I would well, first I'll describe this company and then I'll talk about some of the nuances I want to share with you. But
Fabio, here's what I want you to do. I want you to break down your thesis.
on
And
what?
I want you to tell me what you're seeing. Because like I said, I'm trying to figure this out. I don't have any answers for you. I'm just throwing out stuff to see if it sticks so we can all ask how to make our process better for investing.
Well, one, I would say that
Here's the main problem. And I'm going to tell you the main problem with investing in the stock market. Anybody that tells you they're an expert is lying to you.
yeah, I mean, like you don't have to tell everyone you're an expert.
Yeah, it's human
People just know
interaction.
it.
Yeah, it is I just know this is the best company to buy. Okay, well, why aren't you, like some asset manager on Wall Street then?
The one thing I'll say, like as kind of like a thinking about it, one thing I would add is, well, it matters I think you're probably going to say yeah, but it matters the quality of the cash flows. What I mean by that is how secure are they? How certain that we are that it will happen? And so we'll factor all that in. And then what I would call it, I don't know if there's a better vocab term for it, but the realization or realizability of the value of an asset. Because we can have it marked at whatever, fair value metric we have, but then when we go to sell it, maybe there's something going on and we have to write down that asset or we don't get what we thought we would. But
let me tell you where I started with the thesis that I'm doing everything wrong. I started watching value investing channels, and because I had done the math on my sheet on discount, like on different levels, like what a PE ratio you would need to justify it, I started calling people's projections before I watched through their video. And that made me question everything that I was doing. Because I was like, you're all coming up with the same similar intrinsic value. It cannot be that easy. Even though I just said a little bit ago, and I've had a few drinks, that stop trying to calculate intrinsic value because you can't. Because, like, let me use an example of a hammer. So the price you're willing to pay for a hammer will depend on the needs of the situation, where you are. A carpenter needs a more solid hammer than I do for just driving nails into a wall. Therefore, we're going to value hammers at a different rate. You see what I'm saying? What I'm saying to everybody is price is relevant to the observer due to the needs or the wants of the time. How can you calculate that? You can't.
Yeah, you're also describing the phenomena, like, for example, different people in different stages of life will value assets differently because of their circumstance. Yeah, no, that's true. So if
Here,
you have,
look. Let me give you a perfect example. This is my field jacket, right? That my mom gave me when I was 16. So it has sentimental value to me. So you could buy one of those for $200. But what's its value to me? If you offered me $200 for that coat, I would laugh in your face because I don't have the need to sell it. And because it means more to me than what the object is actually worth because my mom gave it to me.
correct.
This is the point I'm trying to understand about intrinsic value. I don't think you can calculate it.
No, well, you're never going to get an exact. It's like it's more about getting an approximation. An approximation
I
where,
agree with you there.
yeah, where you are willing to own it. And that's what also, like, everyone's going to have their own style, but where you're willing to own it. Now,
Fabio, so here's the question, right? Let's say I run the metrics and I'm like, all right, I came to this price, but this stock is 15% of a higher value. Like, so let's say I, run my numbers and I get that I should pay $35 for this stock, but it's selling at 49.
correct.
But somebody else, like, let's just throw out a name. Michael Burry buys it. Now I'm confused. I ran all my numbers, but somebody that I know is better at investing than me is telling me I'm wrong. But we also know that everybody gets stocks wrong. So the question becomes, what are you looking at? How are you valuing it? And should I go along with your assumptions versus my assumptions?
You should always go with yours. But
I could be wrong,
you
man.
could be wrong. Yeah.
And you could be wrong.
I could be
and
wrong.
so this is the hardest question I'm asking. We know that Ben Graham and Warren Buffett are two of the greatest investors of all time. I also know that Peter Lynch is too, which is why I incorporate PEG ratio into when I'm looking at stuff.
So this is kind of maybe a summation of your thought right now. So, like, who's to say McDonald's is overvalued at a PE of 20? I think it's like 25, but I think they usually trade at like 20, right? Historically, I don't know exactly, but let's just say that, right? Yeah. Who's to say what's the right multiple? Is kind of your summation? Because, okay, what about the more difficult parts to quantify about the value of a business, the eye of the beholder, et cetera, the investor space who currently owns it? What are they willing to sell it for? What if they're saying, I'm never going to sell, like, whatever? I know a lot of people say that about a lot of stocks. Like, there's people who say that about Tesla, but so is that a good summation of so far?
That's a pretty good summation. Because if I used my techniques on Apple in 2016, clearly Warren Buffett saw something I didn't. Because I'm going to be honest with you. If I was sticking solidly to not more than 1.5 times assets or whatever solid metric I wanted to use, Warren Buffett saw something different than I did. And my question is, what is he seeing?
I can kind of describe it because it was more of he was pretty open about it, actually. And one thing with what I used to do, they kind of were looking at something similar. It was more of the value that they were building with the potential for services, because services as a quality of business is much higher than hardware. Like, the market's going to be more willing to pay a higher multiple for service revenue, higher margins, more repetitive, et cetera. And Apple was showing to the world that, okay, our ecosystem, well, this platform that we're building, and I'm saying the word platform to mess with someone out there in the jokingly, of course. Those of you who are on the call on Sunday know where I'm going with this. Building this platform, this ecosystem, where you're going to just pull levers and generate tons of money. So Apple has a service revenue. They also are built out now, or are building in the process of building out their advertising business, which is already going to be insane. So all these levers, they're kind of showing the market that look at all these ways that we were telling you, and they were telling you, by the way. That's the other thing. The company was telling you, these are all the ways we're going to make money in the future.
Bro, this is the problem.
Yeah.
I missed it.
Well, there's companies right now that are in kind of similar boats. Now, shifting through the ones that are, okay, I'm Tattooed Chef, I'm going to revolutionize the vegan food market, right? Or versus like, let's say hypothetically, like we can talk about Meta, for example, in some cases. Like what Meta is going to be building out is what?
This is a perfect example that you just brought up with Meta. Because I don't believe anything that Mark Zuckerberg is saying is going to happen. And why that comes into my mind is just reading a lot of Ray Kurzweil. And I just go, I don't really see it. So I would avoid it. But I'm probably wrong. And I also know that.
Yeah. That's investing.
I know. This is what I'm trying to figure out. What I'm trying to figure out is how to refine my own technique and figure out where that lies. And I'm doing that by asking questions about some of the greatest investors of all time. They obviously know something I don't. That's where I'm going with this. I'm trying to ask questions on what are they seeing that we're not.
I think it's more about it is a bit in this case like the non-cigarette butt investments. It's
the art part of it.
Arc?
It's not the science. It's the art part of it
that
I'm asking.
Art. Yeah. It's kind of knowing or trying to see where things are moving better than how others can see it. And there will be times where things. This is the problem with this is why investing is a bit harder, because one, even when it's time to buy something, maybe others are scared of it. That's where the quote comes from. But it's not to be used all the time. People apply it to everything. People apply it to Palantir. People apply it to Tattooed Chef. Whatever you can think of, it's an overused quote now, and so it's cringe to use. But you're supposed to be greedy when others are fearful, and fearful when others are greedy. But
buy when there's blood in the streets.
But the caveat of it's a good asset to own. That's the caveat that's missing.
This is the problem. When you say that, buy when there's blood in the streets. Well, Tattooed Chef dropped to like 35 cents, and then I bought it, and I lost all my money. So, like, that robotic approach doesn't work.
Yeah. So there was some. Okay, so here's some things that we can talk about. Like, let's go with like Intel, for example, and then we'll go over to, let's say, Walgreens versus CVS as another example, because these are ones that I've spoken about. Walgreens CVS is a good little comparison, by the way. But let's go.
Yeah, and I didn't like CVS. I was looking at Walgreens, and then I just went, I'd rather buy index fund.
At the end of the day, you see, like that's at the end of the day what you're competing against, right? Like the opportunity cost, like you could just buy an index fund. So.
This is what everything competes with in my brain. So, like, Fabio, you have your investing process. My investing process is to look at the likelihood that this works out better with taxes attached to it than it would if I just simply bought one share of VT. And then most of the stocks in my portfolio, what do I have? 3? Right now, outside of index funds, they're all experiments. ABA was an experiment to me. And I still don't think I'm wrong, even though the price dropped. I could be wrong. I just don't think I am.
I am contemplating doing more Baba videos, but I promised everyone I wouldn't do it until it's up. But the community has asked me to, or said they relinquished me of that responsibility, that promise, so I can do more Bob videos. Because remember when I used to have 14, not 14, that's an exaggeration, but a good portion were Baba videos, just like shamelessly beating down on it.
No, and here's the thing. Everybody has their own opinion. You know what I mean?
That's why it's the art, right?
Yeah, that's what I'm saying. I'm
Yeah.
just trying to make better decisions with the extra money that I have to buy stocks. Because
So-
I'm not going above. There's probably no point unless a stock just runs that I'm going to allow the stock portion of my portfolio to be above 10%.
Yeah, that's fair. That's a good portion. So, but there's like certain aspects. Like, okay, let's look at Intel. Initially, people who are newer to the channel may not know this, but back in the day, like we're talking 2021, late 2020, I initiated a position in Intel. It wasn't very big. And then not too long after, another video comes out where it's me and my ex-co-host Austin, and we're announcing that I am selling my shares of Intel, and Austin was not at the time, but we were both disappointed, or I was extremely disappointed in the actions Intel took. And that was one form, because it told me a lot of things. And this was like the art process, because it wasn't showing up in the numbers yet. You have to understand that. That's actually why the criticism was there in the comments section of that video. I was criticized because the analytical portion of the analysis did not reflect that a problem was there. Only that I had a disagreement, a subjective disagreement with the capital allocation of management. And that caused me to say, I don't want to participate in this company, because obviously I can't change how they're doing things. But if I think what they're doing is wrong, then the only thing I can do to remedy that is to leave the company and sell my shares to some guy who bought it. And now, Intel is where it is. I only made actually a small sliver of profit. But
can we bring up Intel on a 10K?
yes, we can bring up Intel on a 10K, of course.
So here's what I want to point out. Intel is now selling at 1.5 times book value.
Yeah. And they deserve to.
Right? I'm not saying this is a robotic process where you just buy like that. But I have to ask the question.
All right, so I'm bringing up their most recent one for this year in January. But one thing I should highlight is it's not reflective. This is not reflective of how things are shaping out to be for Intel. But it's just.
And
it's
then
past.
hold on. But what did I tell you earlier? Information lag.
Yeah.
This is a problem I'm trying to eliminate from my own process.
Well,
because this is what I'm saying about people's cash flows. You're calculating from the past and you're not looking forward. Is that the correct way to look at it? Is all I'm asking.
Let's go here. 10K. All right. It's the strangest one. So let's go. Here we go. All right. I'm here.
All right.
See it on the stream? Well, you can see it via Discord. It's probably much easier.
Okay. So what I'm going to start with is Intel's trading for 26. Its book value is 24. Its book value has been constantly increasing. So this is what I'm telling you, is I'm going to run an experiment. If Intel drops below its book value, I'm going to buy it.
Well, fun fact, for semiconductor companies that have a lot of, let's say, CapEx investment, that's actually tends to be an okay time. Like Micron, I talked about this in the Micron video.
I was looking at Micron the other day.
If you get Micron at under book value, that's historically been the time to accumulate Micron. Really good time, historically. That doesn't mean next time it's not going to be different, but No,
I agree with you. Because these are the questions I'm asking. So, like, if the audience is at home going, none of this makes sense. It's because I'm still trying to redefine it and make myself a better investor.
Yeah,
That's what I'm doing.
You're
That's all
basically
I'm
taking
doing.
us along your journey with yourself.
Yeah, that's all I'm doing. I'm not saying I'm right. I'm just trying to let people in on my thought process as I redefine it. Because my personal opinion is every time you make a mistake, you need to look at what you did and how you reacted to the situation and ask what you did wrong.
Okay, so what do you have it calculated as its book value?
I didn't calculate anything right now. I pulled up 2465 from the internet.
Okay, so
I'm
yeah,
trying to sort through this.
it's around 2465. Currently, it's trading close to that. Yeah, I see that on the internet too. So let's assume that's true. So now, the price is what, $26? So it's $2 above
Yeah,
book
it's
value.
26.
So what you're getting is, a lot of potential. They have the fab facilities that are being invested here in the United States, research facilities being invested in Europe. Now, some of the lack of nuance you have there is one, okay, so how bad of a situation is it? This is something we have to start from. How bad a situation are they in relative to competitors? Like, our competitors, have they gone really far ahead where Intel has a lot to catch up and requires an absolute crazy amount of investment now and lots of pain for a while? Because there was a point where people considered AMD to be destitute, by the way, for the audience out there. You guys might or might not remember that. And so
then it turned around.
Exactly. So could it be that Intel goes down the same path? I don't know. So
that's the question I'm asking. We buy it below book value, right? I'm just collecting dividends the whole time. And so let's just throw out a number. It's trading at a 7 PE ratio.
Okay.
We'll just use the historic trading PE ratio of the stock market. Well, if it reverts to 15, I've just made a lot of money and I can sell it. But if it doesn't, I'm just collecting dividends.
Or there's another scenario. We see deteriorating earnings.
Yep, I agree.
Because they can't, or because the main part of the business is not the consumer facing, it's more the B2B. B2B is very important for these businesses, including AMD. And the things are moving in a different direction, which they might not have the ability to keep up. Like technology, for example, ASIC chips are going to be far more important in the future. Is Intel up to snuff with what other companies are building internally? Like Alphabet is building a lot of hardware internally for their own processes. And NVIDIA is the same question. How are these companies adapting to how things are changing when we're leaving x86 architecture in the future? At some point, it's gonna happen, at least for cloud computing. And how are they shifting to adjust to that? Those are the art side of the questions. Like, it's not saying that Intel would die off, but it could be a severely diminished market that they could address. And
here's a further question. Why not just buy Google?
Well,
we know we're hovering somewhere in the fair value of it.
Well, that's not a question I can answer because I own Google.
This is all the questions I want to ask. Like, okay.
No, because I'm biased. I own Google. That's why.
No, Google's a great, amazing company, and the question becomes, can I get it for the right price?
I felt like I did, but
no, I'm not saying anybody's wrong. I'm just saying
no, like, because I bought it back in the day because these were the things that were the developments that came to fruition. But I think it's still got room. Like, I actually was looking at the price of Google the other day, and I was like, maybe I just destroy my cost basis a little bit, deploy more capital that's coming into Alphabet, buy some more shares. I'm not opposed to it.
And here becomes the problem. Now we got to ask questions, right? Google has an amazing balance sheet, right? It's very little debt.
Yeah.
Okay. So we know that.
Yes.
Well, then it becomes a relative thing where we know we're going into a crappy market. A recession is imminent. We're actually already in a recession. I don't know why people keep arguing about that.
Yeah,
but we
that
are.
makes sense.
Yeah. So now the question becomes, all right, wealth preservation. Where do I want to put my money? Google's price, Google could drop to a 6.5 PE ratio or a 6. And I would just look at you and go, if you're not backing up the truck, you're a moron.
Oh,
See what I'm saying?
Yeah.
So, like, we're going into a recession. I think Google's earnings are going to drop. As amazing as the company is, I think all earnings are going to drop. But would Intel be, and I'm just throwing Intel out, not as I'm saying Intel's a better buy, but I'm just asking the question. Well, Intel's hovering about book value. Is this likely to produce a better return for me than buying Google at what we all assume is fair value?
Well, because like forward P estimates for Intel are actually above 10, because so they are expected to decline. Google, Alphabet, I would assume so too. Maybe if advertising comes down a decent chunk, but
this is what I'm saying. We're headed into a singularity that none of us know what's going to happen.
Mm-hmm.
See what I'm saying? I think Google's earnings are going to drop, and I think virtually almost all companies are going to drop as the liquidity is sucked out of the system by the Fed.
Liquidity crunch.
Yeah. So now here's my thinking. Do I just buy Google? Because I know here's what I think. I think Google is a better company than Intel, and I would rather own Google. But is this the proper price to buy Google versus Intel, and which one will probably give me a better return?
I would say that if you figure out and you know that Intel is going to perform better from here, they're actually going to remedy past mistakes, they're going to adjust. Mm-hmm. These are the things that you need to find out from maybe people who are well versed in the topic, experts in their field, and they can kind of answer those questions. But because Google and Intel, it's not like one's eating the other's lunch. It's, again, more like AMD. So how much farther is AMD than Intel with their, Xilinx acquisition, et cetera? And Intel, by building the fab facilities here in the United States, how has that potentially improved their state in comparison to, competing against Taiwan Semi? Because they're competing against Taiwan Semi, AMD, and now NVIDIA as well with their new graphics cards that have come out. So, I mean, they're not up to snuff, but it's something. And hopefully, because I would prefer the market to be more competitive, hopefully they succeed.
Yeah.
But
so, I mean, what I'm asking is, okay, we know that buying a premium company might not work out for you. We also know that buying a bargain basement company may not work out for you. So the question becomes, where are we going in between? And honestly, that's all I'm trying to answer is I'm looking at way better investors than I am and just asking questions. Again, why did Michael Burry buy GameStop? What was he seeing? Because I can't actually interview him about it, now I got to try and infer what he was seeing, but I know there's going to be errors because he's better at this than I am. But what can I learn from him in his GameStop purchase? That's what I went down the rabbit hole on, man, and why I've been looking at nothing but 10Ks, driving myself insane, going, what are you seeing?
yeah, they're saying, Jay, you got to join the Discord calls.
Maybe, and I don't disagree with that, but I'm just trying to go way above. I want to ask masters what they're doing. What are you seeing? I want to know. Let me borrow your eyes for a second. What are you seeing in the 10K and everything?
I don't think the information is necessarily found in the 10K. That's the thing, because the 10K is telling us the current situation, and everyone's going to do their own little analysis. But I think that's just a portion of what has to go into something. And I think maybe let's take a step back for a second. let's say you and I were venture capitalists. We're going to buy a private business. We're looking around. We have a couple $1 million. And we're going to go out and buy a private business. And we're going to do our analysis. We're going to do our due diligence process. And in that, we're going to meet with the current owners. We're going to discuss terms potentially. But first, we're going to look at, we're going to look at the business.
Seized candy.
But that's what I'm saying. So
Yeah.
if you break it down like that, and by the way, in this process, we're going to actually take control and change the destiny of this business for the better, for worse, but let's assume we do it for the better. If we find a business that we know we can generate and we do our own, formulation based on, let's say our cost of capital, which let's assume, I don't know, for this beautiful example, it's 0%.
Let's say 7.
All right, fine, 7%. And then we find a business that's trading, maybe has a earnings yield, because in the private markets you're going to get a better earnings yield, about 20. Let's be generous, 25%, so 4 times earnings. So you can probably find, and so we find it. We do some agreement because they're going to take the cash. Typically the owner's going to take all the cash out of the business. And then we're going to have to start basically from 0. They either may assume the debt and we pay less for the company, they assume the debt, we pay more for the company, or vice versa. More than likely, we'll assume the debt and pay less for the company. We'll negotiate that. So we do all that, and we acquire this company. So then what is the value to us? What we have determined, I think in that process, if you go through that process, you can try your best to apply it to a publicly traded company. The only big difference is you don't have control over its destiny whatsoever. So, but a lot of the philosophies are the same, and I think that's what he tries to get to a lot when he speaks to investors. He's saying you need to put yourself into that mindset. And so it's way more than just the financials that you see before. That's why it's harder than what it looks. Everyone thinks it's easy getting into this, why most people should index fund and that's it. But you got to go beyond things. You got to try to see not only where is the industry going, because that's important. You need to know your company's space, what role it plays in the industry that it partakes, but also, again, in a microcosm, how is this company that we are buying doing? So industry, how is that doing? How's the company doing? How are we positioned? What makes us better than the next guy? And then you kind of say, well, not all earnings are created equal. That's why the market is saying, okay, well, I'm paying 30 times earnings for Visa. Yeah. It's not true.
No, I agree. Listen, for Visa stock, there's a lot of things I would do that I don't want to talk about on YouTube.
Yeah.
But yeah, no, man, that's basically the gist of what I've been doing for the past 3 weeks.
I mean, it's good to have mental.
It's just coming home from work, reading 10Ks and asking questions. So I don't have any solid answers, man.
Well, there's never really going to be one, and all of them are going to... Yeah, okay, what's his name? Seth Klarman, I think he bought Intel.
Yeah.
And then, or I don't know if you consider Ray Dalio has mixed feelings by people, but he exited Alibaba.
He's a smart dude. Again, because he's a smart dude, doesn't just mean I'm going to say, oh, Ray Dalio sold Baba. Let me sell mine.
Yeah. But it's a journey that they're going through, and they're going to be wrong a lot too. They're going to be right and they're going to be wrong. So that's why it's really good to have that's what's the point of having conversations with other investors. That's actually the point for everyone out here. I mean, I think that's why everyone's here. The whole point is to hear another perspective, relay a perspective back. Everyone shares a perspective. All parties hopefully come out with different perspectives on the same topic.
Well, that's why I was like, when I said 1.5 times assets and somebody pointed out about goodwill, I was like, yeah, that's a problem with it. I agree with you. That's a huge problem.
There's also governance.
You got to start asking questions. And, this is my hypothesis on everything, is that the group is smarter than the individual. So I'd rather just throw out stuff like while we're having a conversation and then wait for the comments to go, okay, this is why you're wrong, in my opinion. So then I can go, okay, let me go look at that. Because, it's just such a complicated process, man. And that's where everybody got themselves in trouble. They started listening to these YouTubers who, I'm like, listen, Andre Geek is a moron. He lied about how much money he had in his account. I can do the math and prove it. Why are you listening to this guy?
He's good at editing. That's why.
I know.
Yeah, it's.
I know why people are doing it, because they want easy answers. There's no easy answers in the stock market. Again, I had to explain this to a woman who goes, can you look at my stock and tell me whether you think I should hold it or sell? And I had to go, look, where'd you get this? She goes, about this price. I go, look, you were hovering around fair value. The stock price is going to drop coming up with everything in the market, but would I sell it? Probably not. It was Target that the person was talking about. They go, can you tell me whether my stock is overvalued? And I go, I can look at it real quick and tell you whether I would sell it. So I asked him about the price he bought it at and where it's at now. And I go, listen, man, I'm just going to tell you, Target's price is going to drop as interest rates go up. But would I sell it? Not at all.
Yeah. There's also like, okay, when you're playing around with that, right? Because this is like why sometimes I'll own a stock and I'll do a video and I'm not optimistic on it, right? I'm not like, oh, this is an amazing buy, like, but I'm not selling it, and I'll say that in the video, and then people ask like, well, why are you not selling it? Well, because sometimes I'm holding it. It's not a position that it's like I'm caring about the near term, 1 to 2 years. But a lot of people say that, so I'm almost kind of cringing myself saying this because it's now unfortunately such an overused statement. It's like, oh, I'm holding for the long term, like, and anyways, whatever.
Yeah, that's to the people on YouTube. A lot of times, that's 1 to 2 years.
Yeah,
that's not long term.
No,
that's short term. You can get into the definitions, but it's still short term. For me, long term is 5 to 10 years and beyond that.
Yeah, because I think my exposure to one of my earliest investments, a couple of my earliest investments that were really home runs for me was about 5-ish years for one of them, 4-ish years for the other one, but around the same time. And then the one that's been the longest in the portfolio, but not yet that good of a winner, funnily enough, is Alphabet and Amazon. But those cost bases have kind of, because I've been just kind of shoveling money, but I haven't sold a single share of Alphabet since I've bought that one. And
what year did you buy it?
Well, going back, like that was one of the first stocks I bought because it was like Google.
What were you seeing?
So this is very young.
It could be just I looked literally at it and I went, it's Google and bought it, and I don't have a problem with that.
It was literally actually the product that I was using as a youngin', and I was like, this is I use it so much. It was when getting started, and I'm still finishing up high school. This is my custodial account at this point, and then entering the university day. So it's still like building up from there. So I haven't sold a single share since that time on Alphabet specifically. But you want an intelligent answer why I bought it. I don't got one. For the very first share? No, that would be lying. It's like, oh yeah, I did this and this and then I figured no. Quite literally the product.
See, this is the problem with investing. It's like, hey man, you got a good return on that stock. What were you seeing? Well, I just went, it's Google.
But okay, there was
All right,
one
so
that I
all
bought
of my
not too
theories
long after
my
that.
hypotheses are breaking down now. It's like, all right, and you know what I mean? It's because everything was just driving me nuts, and I wanted to refine my process. But that's why
Well,
I'm just asking everybody.
sometimes they say like, you want to ask like the youngins, well, what are you guys using these days? Well, as a youngin, thankfully I made the decision. I was like, all right, I use this product almost. It wasn't like, by the way, the one of the more successful investments I ever had in my life thus far, and nothing has come to beating it yet, came not too long after that, about I'd say like two-ish years, 1.5 years after that, and then I started making more serious money. Then I plowed it into this investment, and that one was really good. But very similar thesis. It was noticing a trend. You want to call it social arbitrage, whatever. Bull market benefit also could have been a huge, not could have been, was a huge factor, yes. But no, actually, at the time I was doing analysis on this company. I'll tell you the ticker because it doesn't provide any value telling other people. I've told people the story, but I'll just say the ticker for our conversation's sake. I'll text it to you.
Yeah, no worries.
So these two, one was the first one that I texted you was purchased before the second one, and so both of those was pretty similar thought process as to the first shares of Alphabet. However, as far as like the artsy side, okay, I see that this is like the trend for this company. It's expanding, and you would go online and you would see this service being used a lot, and it was constantly expanding. And eventually, actually, I think in 2017, it just caught fire. Like it was insane. But I'd seen first the position that they were in. There was no one else kind of doing what they were doing. Someone tried, a big boy tried, Amazon tried, and they kind of gave up on it. And they were also very well capitalized. So their position. So like we're saying, where is this market going? So you see, I'm kind of walking through that same process. Where is the market going? And the market's expanding. I mean, it was growing at massive clips every year. I'm talking about the market. And I'm not talking about the stock market as a whole, the market for this entity. And then this entity, while positioned it, was already considered the leader. It wasn't like I was picking the next one, which I actually did experiment with a flavor of the next one. I talked about that failure with the version of this company of China, and that was a failure. I luckily was very lucky.
It. Like I looked at the text, you crushed number one. Number two, I'm gonna have to look at.
Number two is very similar to number one. The thesis almost the same, very similar market targets, different geographies though that they target, and very different style. Both of them heavily investing in infrastructure, unlike other versions of these companies.
Hold on a second. I just processed it where I said, I gotta go look it up. I don't. That was a sick buy.
You know that company? Yeah.
Yeah, I know that company. Spanish?
Yes, it is Spanish.
Yeah.
So
that was a great fucking buy, bro.
That one was introduced to me by a family friend. And so they were invested heavily into this thing. I can't even mention.
I looked at that stock multiple times. Probably, when was I looking at that? 2020? And my conclusion was it's not the right time.
Well, after those two, it kind of changed. I knew that, I guess I wised up because there was, again, it was a massive amount of concentration, but I was young. And so after that moment of success, you could say, with those two, then I focused more on capital preservation, which is kind of where I'm at now. I'm not so much I don't need to repeat that. All right. But I want to focus on preservation more than anything.
This is my thesis on it too, is, speculative money over here than wealth preservation.
But here's the other thing, because the luck part, I will tell you, the market got too whacked out for these two. Mm-hmm. Like, we're talking about the art. There was no way I believed they would get there.
Number one, I looked at a ton of times and I would go, I don't know what you guys are looking at. To me, this just seems massively overvalued.
Well, in 2020, it definitely was.
Mm-hmm.
In 2020, and then in 2021, it got stupid. And
Yeah.
that's...
But this is the question you have to ask. What happened? You can go look at the chart. What happened with that massive run-up? My opinion is it was the Fed dropping interest rates below 1%.
Yeah, no. It was circumstance. It was circumstance. So I picked a good company. That's not out of the... I think that's out of the question.
No, I agree with you. Yeah.
It was a good company. And I'm trying to be honest, by the way, with everyone. Like, I'm saying, like, okay, if I'm looking at the situation honestly, I did pick a good company. That was not the part. Now, a repetition of this scenario occurring is not likely because of the additional circumstance which you were just getting to. There's other factors on top of the quality of that business that further caused, let's say, excess returns. Will that happen again? Is that repeatable? Who knows? But it all started with the process. Well,
dude, I think it is if interest rates drop below 1% again.
Well, yeah, because it does. Yeah, it does still change because portfolio rebalancing and all that. So, yeah. I mean, there's still going to be opportunities. You had it
All right,
out,
brother. Yeah.
All right, I'm going to finish off with these guys telling them Olaplex because I did promise them I would talk about Olaplex, and if the other guy, people are actually shouting out. They're trying to guess the stocks. One of them got one of them right. I won't even say who it was. People on the Discord, I've already chosen.
Yeah, the stocks. Yeah, those were great buys, dude.
No, and like literally the initial process behind all of it was definitely the mind of a young man. I'll tell you that. Definitely the mind of a young man. No, Coupang I only bought recently.
Let me tell you this. The most dangerous thing in investing is you get your first stock right.
Yes, I was lucky to realize, it's also circumstance of like my work experience because I was with people who were way more experienced than I, and if they were able to say, well, like, hey kid, that's you're not the next Warren Buffett there, but good for you, but you're not the next Warren Buffett. So it's just because of that. Like that doesn't prove anything because it's again multiple factors that kind of benefited. You could attribute a lot of it to luck. I've spoken about that in the past, but some people are still trying to guess.
I agree, man. And like I said, part of the problem with investing is it becomes relative to the observer.
Mm.
You know what I mean? But like when I say that, it becomes, is this the right time for me to do this, that, or this? And it's like, how do I value this thing? So
I see some people are, they know because we've spoken about it already, and they're kind of basically giving away. All right, so I don't know if you want to stay for the Olaplex, or you're gonna go to bed, and then I'll just tell you the Olaplex on another day.
I'm gonna eat some food and relax, but we got I'll go 10 more minutes. Explain to me Olaplex.
All right, so I'm going to bring up Olaplex stock price.
Explain to me your thought process. Because what I want to start doing on my channel is just interviewing other investors and just getting an idea of what are you seeing?
Jay.
I want to know what you see. Even if you're a person sitting at home. So I'm going to kind of change the focus of my channel a little bit. I'm going to still do rants, but what I'm turning it to is my thesis on a stock. If you don't agree with me, just leave it down in the comment section and tell me why I'm wrong.
No, I mean, that's a good that's a good perspective to have. You want to have discourse. You want to be challenged. You never want to be surrounded by people who are just going to be like, yes, Jay. Yes, Jay. That's a good idea, Jay. That's great, Jay. Yeah. You're right, Jay.
Yeah. Oh, no, you're right on this stock. I lost money. I'd rather have somebody just going, here's my thesis, and then just rip it apart and tell me why. Tell me why. What are you seeing? Rip it apart, destroy it, and tell me your opinions on it.
Yeah. So this company, just so to give you the TLDR on what this company does, hair products. That's all you need to know. They do hair products on the upper end of the market.
So it's like Jeremy's least bad stock, honest.
It's
a joke. It's a
yeah,
joke.
it's profitable. Okay, so now I'm gonna be doing a video, like a dedicated video to this, and so because I'm gonna be gathering all the public information that you could want, showing the articles and walking through, because this is not like a warning video, or it's not going to be a warning video, and this is not the warning part of the live stream. Like, I'm not warning you about a stock like we did with Voyager, which was easy for everyone to see, and everyone did see it from a mile away. This is kind of like
that knows nothing about investing and explained it for 5 minutes, and they would have told you Voyager was a bad buy. I don't.
Yeah. Wait, Jay, I think we're losing you in terms of internet.
Are we?
Okay, now you're back. Now you're back.
Okay.
Your video's frozen, though, for me. They can't see you right now, but I can see you.
Is what it is, man.
All right, we'll keep it like that. So, Olaplex. Oh, now you're back. There you go. So, Olaplex had a bad day, to say the least. They're down about 56.69%. So, and let me make sure I'm sharing my screen with you so you can see me in real time, because otherwise you're going to be like watching me with a slight delay. So yeah, Olaplex is down 56.69%, and they reported earnings. Guidance was disappointing. I'm going to be doing a dedicated video to this, kind of gathering all the information, showing people, again, not a warning video, but like a case study of lessons to be learned from this moment, right? What could be learned from this for investors who watch the video? That's the value I'm going to try to add to it. Okay, so this is a company that
wait, 1 second.
Go for it.
That's a great attitude to have about this whole situation. Is like, all right, I made a mistake. What did I do wrong?
Yeah, and people, I think some people had small positions in this one, which is why it was asked about not a decent amount. I don't think it was asked a lot, but it was considered. So there were some caveats upon investigation that were problematic signs. Okay, and this was actually brought up by an individual within the group, and one of the issues was, okay, the origin story of this business. How did they IPO? And that's the first exploration that a lot of people would have overlooked. The numbers, they didn't cook the books. That's not the accusation at all. It just looked a lot better. And this is actually not atypical of how a lot of companies come out of the private equity space. So in the private equity space, go figure, when they try to IPO some of the companies they have in their portfolio, they'll do some things that technically make the company look better in some way or another, that could get more money from the public markets via an IPO, especially if they time it correctly, or they get it in something, I don't know, like a 2021 market. Just a thought, 2021, the Roo stocks going everywhere. Well, pretty good time to IPO stock from your PE portfolio. Well, that's basically what happened. And we'll get into some more details about the save and save.
Which is why I don't buy IPOs.
Yes, that would be a decent rule of thumb, because you would avoid this.
Baked into it.
Yeah. And so that was something that is the crux of the lesson that is to be learned, is to, one, maybe consider avoiding IPOs entirely. But I'd say really what you want to do is try to really dig deep. And there's a perfect example that we did go over this with, and that was Corsair Gaming. Corsair Gaming, another company that IPO'd, I think via private equity, was Eagle Tree Capital. And again, there's an individual who I know is of good moral standing. They work at the firm, and so it's not a question of the firm's morality. It's more about the actual the incentive structure. The PE firm, of course, wants to get the most out of it, and sometimes you'll see that they do crazy acquisitions that don't make it, but it makes sense when you break it down, like the strategy that they do. But yeah,
bro. One more thing before I go, and I got to eat and take a piss. I went through Enron's 10K from 1999, and there was one thing I saw in there that made me not even. If I saw this in real life, I would just say, I'm not interested. And that's if you go back and you look at, I'm not sure if it was what year I was looking at it, because I was at work, but not that I should admit that, but I was looking at Enron's 10K, and if you just looked at it, its liabilities were greater than its assets.
yeah. Well, because
Immediately, this is what I'm telling the audience. As I'm refining my technique, I'm not interested in any company where its liabilities are greater than its assets. I'll let the market sort that out. I'm just not buying it.
yeah, okay. So you're basically having like a filter. You're creating yourself a filter.
Yeah, that's what I'm doing right now and trying to figure it out. So what I'm going to do is probably on my channel, I'm going to conduct an experiment. I'm only going to buy stocks under book value.
Can I tell you?
See how that,
I'm going to text you a stock. It's the one I would not mention here on the stream because it's too small. I will text you a ticker symbol, and
okay, I'll look at it.
I'm going to text it to you right now, actually. So this ticker symbol, it will be a very fun company for you to actually take a look at. I like finding companies like that, but it's one where the thesis is literally you're waiting for someone to pass away. I'm not joking.
Okay.
You will look at their balance sheet. Just explore around there, and you'll really like what you see based off of just the commentary you're giving me. But there's a chink in the thesis
armor?
or the armor that will, if you don't figure out, and if you want me to just tell you when you're looking through it, just text me and I'll just tell you the answer.
No, dude, I'm gonna fucking. I want to put this puzzle together.
Okay.
So
you'll have fun with that ticker.
Okay.
I have a couple tickers like that, but.
Bro, because I'm gonna take off in a second. Next time we do this, we should do an entire episode where we look at bankrupt companies and try and figure out the death clock, when it started, and like what was happening as it went down. We should look at Enron, WorldCom, any of these big companies. We should go through the 10K and try and find, like, if there's anything that would have given, and there is, but would have given us a sign, this is a crappy company, don't buy it.
All right, you hear it, folks. We're basically going to do a mini fraud, not a fraud, but like mini.
Dude, this is what we should do for fun.
Auditing.
To let us know, like, to refine the process. Let's just look at a bunch of bankrupt companies and just look at their balance sheet.
Yeah. Well, someone's pointing out, well, Enron was a fraud, and then.
No, I know.
So,
but I'm saying when I looked at it and I go, all right, its liabilities are greater than its assets, and this was in 99 or 2000, I forget which one. But I was like, I would have just discounted that stock and moved on.
Yeah, there's a couple here. I'm going to text you another ticker. This is a current fraud that hasn't been discovered yet.
Oh, dude, I want to try and spot it. Don't tell me where it is.
Okay, yeah, I just texted you the ticker.
Just text me the ticker symbol, and I want to look at it.
This is the one I told YouTube I won't do a video on yet because I'm still figuring out how litigious this guy is. The CEO is extremely litigious. So, but I texted you the ticker.
Yeah, I think you texted me this before.
Yeah, I've told you about this company before.
Yeah.
So now you have the tickers to remind you to just look into them. So the first one is the very interesting from your exploration on, looking at a balance sheet. The second one is the fraud. If I remember another one, I'll give it to you if it's like an interesting like case study of something. Usually a lot of them are in the small ones because the big ones are like, really hard to spot. Small ones are a lot easier to spot.
Do you know why? Because they have the money to hire really good accountants.
Oh yeah.
Just go, all right, I'll bury this in the financials and you won't find it.
Guys, okay, well, let me address a comment here. Someone guessed Nikola. It's definitely not Nikola. Nikola is like the one you can see from like 10 miles away. Yeah, it's not Nikola. These are harder to find.
That's the one I got burned on with, what did I lose? I lost $70 where I go, you know what? I know this company is a piece of crap. Let me play it. I wanted to play the hype, got burned.
Yeah. Oh, yeah. You got okay. So people know because I did cover this in various calls, both the Sunday calls and the free calls. Because I don't like I'll cover this stuff there too, but yeah. So I see you guys say, oh no, sorry, it was a joke. All right, Grayson was a joke. I thought it was literal. I thought you were actually guessing was, but yeah. I hate that I didn't take notes on this one on this call. Or on this stock that I'm just referring to indirectly. Oh, you guys both forgot the ticker. Well, you guys can ask again on the Sunday call, and I'll go over it again. That's what those are for. Those are for you guys.
All right, brother.
All right,
I'm
man.
gonna cook food and go to bed.
No worries. I'll say goodbye basically to everyone. Closing thoughts and stuff.
All right, brother. I'll text you.
All right, I'll see you, man. I'll see you next Wednesday.
Yeah, man.
All right, so, I forgot. I need my camera this way. Actually, no. What am I doing? This is the better way. All right, so I just do this, and I just turn on my camera here. Now that should work. Haha. Does it work? No. Yeah, I'd have to. Okay, so no, I do have to do it this way because I have to restart the program otherwise. All right. Hopefully, Cole doesn't pick up because Cole's probably sleeping. So once they don't pick up, it will be fine. All right. So Fabio, no, I remember that. Can I spoil it? Don't spoil it. Well, I don't know. It doesn't matter. All the referred tickers. Well, I referred to a lot of the tickers in. I said, this ticker, that ticker, but I did cover them before. It's just I'm careful. I'm just careful, guys. Let's see. I'm just trying to answer if you guys have any last minute questions, I shall close off after. Tano C, yes. The answer is yes. You still have to go through an interview process. Again, the reason why there's an interview process for the free version and the paid version, because you have to enter in order to get. There was like a leakage. I think the leakage is fixed, but yeah, you have to pass the interview because we're trying to make sure that the people that are entering are all in the good spirit, the same spirit, and yeah. Is Shopify better than Amazon? Stop it. No, Kingdom. No, it's not. Stop it. But yeah, I'll say that. Fabio, and read general in your Discord. Yeah, sure. That makes it awkward because I have to. Okay, well, I have to exit out of this. All right, I'll be right back with the camera, ladies and gents. Oh gosh, Albertsons is giving out a $6.85 special dividend. Too good to be true. Someone please just give that person my my video. Cole, just send that person on Reddit my video. How about that? That just answers their questions. So you could write a response and just explain the whole thing, or you could just send them my video. But yeah, just do that. Always thanks for the stream, Fabio. No worries. Hopefully you had a good one. If you guys enjoyed the stream and you wanna, show me that, just leave a like. Just smash that like button, as they say. Only if you enjoyed it. If you didn't enjoy it, it is what it is. You didn't like it. You could dislike it too. It doesn't matter. Just express your opinions there. I'll send the video, Don. Oh, okay. Thank you. Yeah. No, it's just like, okay, it helps out the person, and if you think it's a good representation of what the answer is, then just share you share the content, and then they go, oh, okay, that's why, because it's actually like literally a video essay as to the problem with the assumption. But yeah, so the video on Olaplex, again, just to reiterate one more time, it will be done from the perspective of what lessons can be learned here. I didn't get the time to investigate Olaplex before this, but I'm not going to say I would have found it. Actually, perhaps I actually would not have found these answers and would have been asking these questions. But it's a good lesson going forward, and it's a dodged bullet for me at least. Because, well, I don't know if I was considering buying it. I don't know if after the analysis I would have been like, oh, it's a buy. But going forward, I think it's the value that I think it's going to add, and the value it's added to me is to say, okay, this company is more recent. How did it come to be? Why is it public? Who brought it public, etc. So, P. Morton, the merger is, and that was we talked about earlier in this live stream. The merger is Kroger and Albertsons, ticker symbol KR, ticker symbol ACI. All right, so hopefully that helps out with that. But let's see here. All right, no more questions. It seems like no more questions. Most of the comments knew nothing about the merger, by the way. It's funny because Albertsons' special dividend is more than the share of Olaplex. Yeah, that's true. Can we make a T-shirt of Nicolas Cage, National Treasure, with Jay Nagi's face, Photoshop? There are people who would comment in some of my videos asking for merch. I feel like, I don't even know, like, I think you use like a website like Teespring or something like that. People did the same thing to Strongman. They were like, literally, I would go to be someone saying, this is the 7th day of me asking for merch. All right, so that's the last bit of comments I see. All right, guys, with that being said, thank you guys so much for watching, and I will see you guys on the next one. Oh, yeah, and you guys could see Cole's video he sent me. It was the Kroger commercial. He sent me the Kroger commercial. All right, guys. You guys are going to see, what's his name? This guy.
We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.